raise the price, let's cut back on marketing. And so the competitive landscape for Netflix is far less intense than it was. I think we had this brief period of time during the pandemic where everyone in legacy media, cable network media world thought like getting into streaming was easy. Now they're realizing it is really hard. The markets are no longer paying for subs. They want to see profitability. So they're all pulling back. So number one, competition is lessening for Netflix. Number two, I think the reality is that Netflix investing in lower cost tier, getting out in advertising, having a lower cost service is making a very big difference. And then I think three, one of the amazing things that you're in right now is as the legacy media companies pull back on their own streaming efforts, they're seeing their legacy businesses, cable, television, really under pressure. They're licensing more content. Just last night you saw Warner Brothers Discovery's HBO licensing Sex and the City to Netflix. Like, amount of content flowing onto Netflix is exploding. We've really come full circle. It's like Back to the Future day. Like, remember 5 years ago, everything was on Netflix from third-party companies. Yeah. Then there was nothing, and now we're really right back to it. We're back to that, the heroin needle is back in the arm. Like, they can't get off of the drug of licensing content to Netflix. They need it for survival right now. And so Netflix is in this position where they've got more content than ever before, and the competitive dynamic is less than in years, and they've got a cheaper service with advertising to offer to consumers. That perfect storm is why Netflix had their second best net ad quarter in the company's history.
Okay, so Rich, what therefore is priced in? Before we get into basically what seems to be a bit of a bloodbath in the rest of the competitive landscape, what about the leadership position that Deutsche Bank at the moment is saying is fully priced into the stock at these levels? Is it how much further can we run?
The internet is generally winner take most. I was just listening to one of your colleagues talk about, Meta getting back to $1 trillion market cap. There is, I think, tremendous room to run. Netflix is still, you're still looking at a company that there's no reason why they can't add hundreds of millions of subscribers. I mean, the fact that they added 13 million subscribers in a quarter. I mean, they're now at 70 million subscribers in the U.S. I think people not too long ago thought the U.S. was tapped out. Now they're growing the U.S. nicely again, and I think all signs point to them getting to 80 to 90 million subs over time. Europe, you mentioned, there's huge growth opportunities in Europe. So I think the reality is now that they have a lower cost product and they have an advertising tier in markets that represent 80% of ad dollars worldwide. So there's tremendous potential to accelerate growth. I don't think the growth story is over at all. And I think the most important thing to think about is that competitive dynamic eases. That's going to fuel Netflix. And the real question should be, what happens to all these other companies, whether it's Disney or Warner Brothers or Paramount?
Well, Rich, we discussed that 24 hours ago in the context of the WWE deal, right? It answers all of the points you've just made in that it's Raw in the US, but exclusivity on all the other properties outside the US. Where's Disney and ESPN? I don't see them doing deals like the one which surprised us between Netflix and TKO.
The reality is these companies can't compete. They just don't. They're trying to balance their legacy media assets. So whether that's cable networks or linear broadcast TV networks and TV stations, they're all trying to balance. And so the result is, as those businesses, which are very profitable, decline, they don't have the same dollars to invest in streaming. And so they're all scaling back. And so the real question that I think we should be asking, we've got all of the major media companies reporting over the next couple of weeks, and I'm sure you're going to be discussing it, Ed and Caroline. The question is, why are you still doing streaming? Like, should you just give up? Like, is there a path to building a scaled global streaming platform that really makes meaningful dollars? Or are you kidding yourself and you're sort of just in that denial phase? And I think that's the real sort of, if you think about what's going on in boardrooms right now, you woke up this morning and you're like, holy cow, they added 13 million subs. They're already at this massive scale and they're growing at multiples of how fast we're growing. They're investing more. We're cutting back. Like, why are we doing this? Should we be in the Peacock business? Should Paramount Plus exist? We believe no. How soon do these executives figure out what we believe they should do?
If we don't hear at this earnings, and we do still see the fight on when it comes to more broadly the world of streaming. Is now Netflix basically a global TV? Has it already got there, Rich?
It feels, Carolyn, like you've hit escape velocity. I mean, it really feels that way. Now, I will say there's probably a time pre-pandemic, I think there was a point in time where people felt the same, including myself, about Netflix. And then everyone called into question because they saw what was happening during the pandemic, where everyone, Disney Plus exploded and HBO Max, when it was called that at the time, was exploding. And I think everyone got very excited that this was easy to replicate. I think now they're all realizing that they are not capable. They don't have the resources, technical knowledge, the commitment to the business. And so I do feel like Netflix is at that escape velocity. And I think the only question is, how much money are these big media companies going to torch on streaming before they realize this is just not what they do well? They actually just make great content, and they should focus on harvesting as much cash out of that business and not try to be a platform. That's probably where we end up by the end of 24 with several of these companies. They're just going to have to give up.
Rich Greenfield, always great to have some time with you. Lightshed Partners, we thank you. Meanwhile, coming up, CrowdStrike Chief Technology Officer Michael Santonis is going to be sitting down with us, all discussing cybersecurity and the role in upcoming elections. Ed?
Yeah, real quick check of shares of Alphabet, parent of Google, hitting new records in terms of surpassing its all-time closing high, up 1.5%, 149.20 on the stock. The trade is AI optimism around this name. We'll keep looking at it. This is Bloomberg Technology.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader. Yes. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot. In many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg. Top experts. Great questions.
This is not your typical victory speech, but let's not have somebody take a victory when she had a very bad night.
This race is far from over. There are dozens of states left to go.
Former President Trump and fellow contender Nikki Haley there. After the results came out, of course, Bloomberg's Kayleigh Lyons was all across them in the real time. You're now coming to us from Manchester, New Hampshire, the morning after the primary, to give us basically the details on the vote and also how the internet technology is intertwined into all of this.
Well, Caroline, the details of this vote were Trump won by a double-digit margin, maybe not the margin we expected going into primary day, but by 11 points. So not necessarily the strong second place showing that Nikki Haley and her supporters were looking for. Nonetheless, she says she is going to stay in this race, go to the next real contest that she wants to compete in, her home state of South Carolina, where she served as governor. That primary is on February 24th. The issue is she's polling more than 30 points below Trump in her home state. And over the course of the next 4 weeks, attacks against her in South Carolina and elsewhere could only intensify, as will likely calls from the Republican establishment to fall in line behind Trump, as he is at this point the presumptive Republican nominee. Of course, this tees us up, given Haley's very difficult road ahead. Very hard to see how she has a path to the nomination for a rematch of the 2020 election. Donald Trump versus incumbent President Joe Biden. Now, the Biden campaign seems like it's welcoming this development. They have always wanted to have a general election against former President Trump because Biden has beaten him once before, obviously, in 2020. But of course, Biden was in some ways not officially on the ballot here in New Hampshire as well. The Democratic Party, together with the president, have decided that the first primary should be in South Carolina, not here in New Hampshire. So he was not on the ballot. Instead, there was a write-in campaign for him here, while other candidates, like the Democratic congressman from Minnesota, Dean Phillips, were actually on the ballot. Biden won, though, in a decisive victory, really historic for a write-in campaign, more than 70% of the vote, while Dean Phillips got around 20%. What was interesting, though, guys, and this relates to your program here on Bloomberg Technology, is right before the primary, a robocall AI generated with the voice of Joe Biden was making phone calls to voters here saying to hold their vote until November, essentially encouraging them not to go out and write in the name of the president. We asked the Congressman Dean Phillips about that a few days ago when that news broke. He didn't know anything about who was behind the robocall, but he did say we need to be thinking really critically about deep fakes in this election cycle, and he does not think President Biden has done enough at this point to address it, guys.
And therein lies a key technology story for this election cycle. Bloomberg's Kaylee Lyons on the ground. Terrific reporting. Thank you. Let's stick with politics and that AI story this election cycle. CrowdStrike President Michael Santonas joins us now to discuss how generative AI could affect the upcoming election and how his company views election security off the heels of yesterday's New Hampshire primary. The deep fake is one example of malicious, let's call it malicious content that circulates on social media. In the early forays of this election cycle, what is the volume of activity you are seeing in that use case and others?
Yeah, thanks for having me. Look, I think it's going to be an interesting year. There's over 40 countries that are voting this year. The problems that you're talking about this morning are a growing issue. And I think in a lot of ways, it's what we're going to see. There's been so much talk over the years about voting systems and, probably too much being put into that area, because we do have to think about deep fakes. We have to think about disinformation campaigns. And ultimately, what it's going to come down to is the average voter is going to really struggle to understand what's real, what's not. And they're going to have to do a lot of work to make sure that they're not making decisions on who to vote for that maybe is based on incorrect information.
Audio deepfakes, actually something we saw in Slovakia's parliamentary election already, so something that's coming and unfolding. How much are, governments, most front and center, but social media companies, managing to brace for this? Because it can't all just be left in the hands of a consumer to try and work out real from not.
Well, it can't be left to the consumer, but the problem is that it's very easy for a consumer to create this content. What was once a very technical thing to do is now a few $1,000s, and you can go and get a very good, capable graphics card in the system. You can get some instructions, and you can build your own deepfake. You can build the voiceover. You can build a video. So the challenge is we're going to see a lot of this content in volumes that we've never seen before, created by the average person. So it's going to be something that everyone's going to have to step up to address, whether it's governments, whether it's the social media sites. It's something that should be a concern to everybody, because it's going to really sway decisions that people are making, because it's just so easy to create this content today.
Absolutely fascinating. And of course, this isn't just the only election that's on the books here worldwide. Plenty to be cracking down on. CrowdStrike President Michael Santonas, we want to thank you so much for joining us today, and I'm sure we may well be returning for your expertise in the future. Meanwhile, look, a group of senators from both sides of the aisle is ramping up calls for creation of a federal agency to regulate the technology industry. That's as concerns surrounding the risks of AI, as we discussed, they continue to grow. Now, the group wrote a letter urging Majority Leader Chuck Schumer to establish an agency dedicated to regulating the nation's largest tech companies. Ed.
Right, it's coming up on the program. ASML says it's seeing some pretty positive signs in sales growth as the chip-making equipment industry bottoms out. Bloomberg TV caught up with its CEO, and we will bring you that conversation next. This is Bloomberg Technology.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much, much more than a bookkeeper.
One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We are like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
It's an amazing time to be in this role. It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. A new episode every month, only on Bloomberg.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
It's time for Talking Tech. And first up, Washington state legislators are at the center of a growing debate regarding artificial intelligence regulation. House Bill 1951 hopes to place restrictions on how businesses and government agencies can replace human decision-making with AI. However, big tech lobbyists argue that the bill is flawed. And Apple is hitting the brakes on its plans to bring a self-driving car to market. Bloomberg's reporting that the company is now shifting its focus toward building an electric car with more limited features. With the latest changes, the company is looking to introduce the car in 2028 at the earliest, down from 2026. Plus, ASML CEO Peter Wenick tells Bloomberg TV that the generative AI boom needs his company's technology to compute and store data. The Dutch chip maker benefited from strong demand from China last year, shares today at an all-time high. Caro.
Extraordinary share reaction, extraordinary set of numbers. And you're just talking about the SML performance. We actually spoke with the CEO, Peter Wenick, a little bit earlier. He sat down with Bloomberg's Tom McKenzie and really laid into the clarity of China and artificial intelligence. Take a listen.
90% of our business in China has to do with mature technology. And that's the technology that we need for all the major transitions. You know, if you think about energy transition, the electrical vehicle transition, digitization, rollout of the smart grid, life sciences, it's all mature technology. That's where the masses are. Yeah?
So what is your message to those in Washington, lawmakers in Washington, lawmakers in The Hague even, who are pushing to expand those restrictions beyond the most cutting-edge lithography machines, to expand those restrictions on the sale of lithography to China?
Well, I have full respect for national security concerns. That's not the point. But I think we need to take into consideration that this chip industry has created an almost seamless ecosystem across the globe that has given us massive advantages in terms of innovation and cost reduction. So that from an economic point of view, we need to make sure that that economic system that we have created, which has given us so much benefit, that we keep that intact. It's not about national security. It's about making sure that innovation can keep going.
You're stepping down in April. Does your successor at least have to war game the possibility, the scenario where ASML has to operate in a global market ex-China?
Well, you know, I don't know whether he's wargaming. I don't think he's a gamer, to be very honest. You know, we'll just have to deal with the reality. But I also, you know, I'm an optimist that worries a lot, and I do believe that we have created, macroeconomic systems that are so dependent on each other that I think that is a scenario you can always put into a game, but I don't think that's a very realistic one.
You do not have generative AI without ASML. It's as simple as that. Without your extreme ultraviolet lithography machines, how much demand are your clients saying they are seeing for chip making equipment to generate those kind of AI chips?
Well, let me first of all say that I think the full extent of what AI could bring is not totally clear because it's all about the applications, yeah? And that still needs to develop. But one thing is absolutely sure. It's going to need massive amounts of compute power and storage, data storage. So I think without ASML, without our technology, that's not going to happen. So it's very clear that it's going to be a big driver going forward for our business and the business of our customers.
That was ASML CEO Peter Wenning, the chip equipment maker, Europe's most valuable tech company. Coming up, Tesla earnings out after the bell. We push ahead with a game of bingo. Details next. Karen.
Yeah, and just returning to valuable tech names over there in Europe, German juggernaut, which is SAP, they're actually doing a massive restructuring, job restructuring. In fact, though the shares managed to push on higher in US trading, in fact, they reached a record high.
Did art conservation help you in any way to be a better investor? And should a lot of good investors learn how to be an art conservator as well, or not?
I think in conservation and art history and liberal arts, I think differently than a lot of people that have just done finance. And also, I think I mentioned one of the things is to do conservation, you have to really do a lot of work, pre-work, before you actually do a treatment. And so a lot of that pre-work is very similar to what I do in due diligence for investments. You know, lots of testing, lots of thinking about what could go wrong, lots of research. You know, when I was an art historian, that was in the old days before the internet, but you'd sit in the stacks and you'd pull one thing in a bibliography on this and you'd sort of like a mosaic theory, put all these things together. I feel like I do that in my due diligence.
Top names in climate finance are on Bloomberg.
I can't tell whether you're optimistic or pessimistic about climate finance.
A lot of great stuff is happening, but is it enough? No, it's not enough.
I'm biased. I'm a huge investor in both fission and fusion and hoping that it comes in time.
Transition is not going to be an event. It's a process.
But at the end of the day, it's the right thing for the planet, it's the right thing for the industry, and there is business opportunity.
Watch Bloomberg Real Yield at its new time, Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
Welcome Bloomberg Technology. Ed Ludlow here in San Francisco.
I'm Caroline Hyde in New York. Let's get a quick check on these markets, Ed, because we're riding high, and it seems to be thanks to technology, in particular some of the earnings managing to break through and really encourage the market to really be buying into stocks at a time where still we saw some strong economic data that perhaps made some of the numbers when it came to the bond market pull out a little bit. But when we look at the stock market, we're up more than a percentage point on the NASDAQ. We're seeing some outperformance as well in terms of China shares. I'm particularly looking at the Crane shares at the moment. This is after we know that there's anticipation of a rate cut coming, some stimulus yet to be injected into the Chinese economy. We saw both key indexes in trading here in the US of Chinese internet names really managing to galvanize on the back of that, up 3%. But look, they have eroded in value over the last few months. I'm looking also what's happening in the world of Bitcoin, and look, we're up about 2%. We're looking at basically trading in that $40,000 level. Now, let's just dwell on some of the record highs that we're hitting today, because in amongst some of the strong economic data, we're still deciding that tech names are going to outperform, particularly from the Magnificent Seven that have already rode so high already. Look at Meta. I see above a $1 trillion market capitalization. We are riding high on Meta. Alphabet also at a new record high as well. Microsoft above $3 trillion. We also, though, want to shine a light on what's happening with Tesla. Will those earnings manage to, well, incentivize some of the investors to come back to that name? Because remember, it's one of the most expensive out there on the Magnificent Seven and the worst performer of late, Ed.
Yeah, I think in the earnings context, EPS is forecast to drop 38% year on year, a very different story with the other six. So Tesla is reporting earnings after the closing bell today. We're going to spice things up a bit in terms of how you react to those results with a game of bingo from the Elon Inc. podcast team. Joining us to explain the methodology, the science behind this masterpiece, co-host of the Elon Inc. podcast, Bloomberg's Max Chafkin. I'm going to go straight to something that you've shortchanged the global audience on, which is you put prototypes are easy, production is hard, in two separate squares. You and I both know that comes in one sentence.
Listen, as Bloomberg's chief bingo scientist, I can tell you that, a bingo card needs to have some gimmies and some that are much less likely to hit. You're right. It will be very surprising if Elon Musk did not say prototypes are easy, production is hard, of course, in reference to the difficulty manufacturing the Cybertruck, Tesla's new pickup truck.
A lot of these are fun. A lot of these are, at one point you're saying whether he's going to audibly take a toke. But what is crucial for an investor base here? What are the words that you think will come out of his mouth that might inject some enthusiasm or create further routes?
So, as Ed said, we're trying to have a little fun with this and also participating in what is really like a time-honored tradition for both Tesla bulls as well as critics. Lots of investors, lots of commentators have made their own bingo cards. You can find them on Reddit. So we wanted to kind of join in the fun. I think in terms for investors, it sounds strange to say, but Elon Musk's mood is very important. He is one of the most accessible CEOs, probably the most accessible CEO in the world. He talks all the time, continuously. He doesn't hold back, as we often discuss. And so how he describes these numbers is probably just as important as the numbers that he describes. Do we get a sad Elon, a dour Elon, a pessimistic Elon, or do we get an optimistic Elon? And I think that will ultimately decide how investors react to what happens later today.
Investors want to hear what demand is like, but also the dojo, the supercomputer, the AI, the robotics question. Now, this is something we're starting to hear from Elon Musk, that he's might well just take that kind of technology elsewhere if he is not recompensed in the way he wants to be by Tesla. Are we going to hear any pushback on his own board again?
Well, that should be very interesting. And the idea that, Elon Musk, of course, he's very unconventional, but the idea that he's asking for what amounts to a massive pay raise at the same time, essentially making a threat, or at least a veiled threat, as you said, to take his AI expertise elsewhere, it's kind of staggering, especially given that for a couple of years now, he's been emphasizing that AI is sort of core to Tesla. And
that's why the share rose more than 100%.
Exactly. The whole bet here, especially for Tesla bulls, is that this company is going to operate a robotaxi fleet, will eventually build a supercomputer, Dojo, as you say, which I believe is N1 on your bingo card if you're playing at home. And so it is a bit of a head scratcher. On the other hand, he does have some leverage here because, of course, he has these other companies that are also doing AI stuff, X most notably. And so there is, in some sense, a credible threat to Tesla investors. And, as we've seen, the Tesla board has generally gone along with whatever Elon Musk asked for. So he'll probably feel emboldened.
the beauty of this bingo board and card is that it means different things to different people. So the basics for Wall Street are, will Tesla reiterate its 50% compound annual average growth for 2024? In other words, will they say they're on track to build 2.5 million EVs? But for that like Tesla owner fan retail audience, look at the top right square, full self-driving. And what's so interesting in the last 24 hours or so is they brought out version 12 of FSD beta, and there's so much chat about it. You know, how do you think that will be distinguished, Max, between the Tesla fan, the Elon Musk supporter, the retail investor, and legacy Wall Street that sometimes just focuses on the fundamentals, should we call it?
So, you know, I would argue that the full self-driving promise is very important to everybody. Of course, there are, as you say, Ed, some analysts who are much more focused on these kind of the question of margins, and I think, you know, basically, how many people want to buy Teslas and what are the margins? Those are the two most pressing questions. But how Elon Musk himself sees self-driving, is it something that's going to happen next year, as he always said? You know, it basically seems like every year he says it's coming next year. Hasn't come yet. It's been a source of continual disappointment and criticism. But watching to see if he ever pulls back from that promise, I think that would have huge effects on not just on demand, not just on like car buyers, but also on how investors think about this stock. Because again, so much of the value is about the future and the promise that Elon Musk has, you know, been reiterating year after year after year, that this is going to be more than a car company.
Wow, Max Strafkin, it is a beautiful bingo card. And we thank you for being our chief scientist of bingo cards in residence. And Ed, what have you got coming up on the world of Elon?
Well, look, while I was at CES in Las Vegas earlier this month, I had to take the opportunity to take a ride in one of the Tesla vehicles that's operating in Elon Musk and Boring's Vegas Loop. Here's how it went.
This is the Vegas Loop, a 1.7-mile series of tunnels under the Las Vegas Convention Center made by Elon Musk's Boring Co. During CES 2024, we took a ride in one of the Loop's Tesla Model Ys. I jumped in at the Central Station, riding to West Station, and then on to Riviera Station and Resorts World, before circling back without getting out. It took me about 15 minutes to do that loop. Top speed in the straight parts of the tunnel was 40 miles per hour, with an average of 30. When things got congested, 15 miles an hour. There were no crazy wait times with the full fleet of Teslas deployed. It got busier around lunchtime, but lines were minimal. The ride can be bumpy at times in certain sections, but if you're going to walk from West Hall to North or Central Hall, that could take you 25 minutes. It takes just 2 minutes in the loop, and within the LVCC, it's free. The system's designed to carry more than 4,400 convention goers an hour in the Teslas. In the future, there's a plan for special vehicles that carry 12 people. Boring's also planning an expansion of 68 miles of tunnels with 93 stations across the Vegas Convention Center and, of course, the Las Vegas Strip.
By the way, if you're claustrophobic, this is not the future travel technology for you, Caroline.
Its limitations still, Ed. Meanwhile, coming up, look, how creative, more creative startups, how can they avoid a lower valuation? We'll discuss all that next. Meanwhile, look, there are more earnings coming thick and fast. Not just Tesla, ServiceNow, IBM after the bell. IBM currently trading down 0.2%, but the market is looking pretty buoyant, looking in anticipation of cash flow coming back on, and also any mention of AI. ServiceNow up 2.2%. Current remaining performance obligations are projected to rise almost 21%. We'll see how they manage to perform after the bell. This is Bloomberg Technology.
To the world of business. Every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, live around the world every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything.
So I notice in a couple of drugstores, even in my area, which is not the poorest area in Washington, D.C., it's a nice upscale sort of area. When I want to get razor blades, you have to go to the front of the place and ask somebody to unlock it. Why are you locking up razor blades and other things that I might want to buy?
Yes. So, this is a national problem. And, this isn't, random theft. This is organized crime. And, state legislation has put guidelines on, how much the theft that you can steal before you're convicted. So it's a $1,000 limit. But we have been partnering with other retailers and sharing our camera feed. I know some of our partners here from Walmart are here, but we are all part of an organization that's coming together that says if you've, we can put our camera feed together and tell that that person has been in our store and their store, and the numbers are higher than 1,000. So we've been able to impact these theft rings most recently.
What are the things that are on lock and key the most? What are people trying to steal the most, other than razor blades?
I will tell you, it started at razor blades because that's such a high-ticket item, but, it's a lot of cosmetics. But really what happens is that they take advantage of what I would call the elbow move, and they just come in and swipe a counter. And so it's just a matter of categories now.
Years old, you're running USAID. How many employees does it have?
We had 11,000.
And did you feel qualified to run something that big?
I did until, the work started.
Let's just talk about the environment for startups. It's been a tough one. Typically, though, of course, they depend on serial infusions of funding from backers to get through their early years. And so a so-called down round, basically raising money at a lower implied valuation than before, it's a big black eye. So lately, companies have gotten kind of creative to try and avoid being considered less valuable. I want to bring in Bloomberg's Hema Palmer, who's just written a key story on all of this. And how inventive and ultimately how ignoring of their own investors they're becoming.
Yes, so it's become, as you mentioned, a very challenging environment. So companies have been a lot more reticent to let their own shareholders know what's happening inside their company. And so what that means is those shareholders struggle to value and mark these companies in their books, and that has a whole trickle-up effect to their investors and the ones even above them.
There's an interesting element of your story, which is the secondaries market. And it's interesting partly because Caroline and I have been really focused on it in recent weeks. But think about the mechanics of how it works in terms of employee liquidity and what you do or don't have to share in terms of financials, while also not having to offer new equity.
Precisely. So the secondary market has gotten very interesting as a lot of investors don't have a way to typically get out. There's few IPOs, there's fewer M&A. So you're seeing the secondary market be the place people turn to get liquidity, and especially employees who are common shareholders and maybe looking for some cash on hand. But that's becoming more and more challenging because if people don't know what's happening at the company, if they don't have access to financials, they don't know how to price these things. So if a buyer is interested, they don't know how they should value this company, what bid they should offer, if should it be a 20% discount or an 80% discount, and they may not be able to get through their due diligence. And so sellers as well too may not have that insight, especially if they're lower in the cap table.
All right, Bloomberg's Hema Palmer, thank you. Now, speaking of startup valuations, here's one that just doubled. Built Rewards is the app that rewards consumers on their rent. Just raised a $200 million round led by General Catalyst and pushed the company's valuation to $3.1 billion. That's a big valuation. The New York-based startup plans to use some of that money to expand its rewards network to include small restaurants, grocery stores, dry cleaners, and other local merchants. And by the way, as someone that rents and is trying to find a house to buy in the Bay Area, good luck. This is an interesting concept. Let's bring in CEO Anka Jain for more. Anchor, welcome to the program.
Thanks for having me.
Let's start with the round and get that done. You know, big chunk of change, big valuation, but why did you do it? Why did you need that cash?
Oh, the nice thing about the way we've been raising capital at Built is we've never actually raised cash in a moment where we needed money, right? And so the company today is profitable, and that's allowed us to be more strategic. And instead of just going out and doing a fundraise, this was really more about partnerships. And so what we've been so lucky to have happen today is we brought in Ken Chenault, who was the CEO of American Express for years. He built membership rewards and this merchant ecosystem, join us. And as I think you probably know, after he left American Express, he joined General Catalyst, where he is also their lead investor. And so part of this round is really about aligning interests, bringing in Ken as a partner in the business. And then a lot of this can be used for things like share buybacks. You're talking about secondaries. One of the benefits of being a profitable company is you can focus on long-term while still giving investors early liquidity opportunities.
Is it going to change you having a co-branded MasterCard if you've now got an Amex?
No. So remember, Built, well, this is the thing, right? So Built's business, we are the payments and rewards platform for rental apartments across the country. So people get rewarded with rent payments no matter how they pay. Check, cash, ACH payments, Amex, Visa, MasterCard. I think what's so exciting now, though, is you're not just getting points on rent. You're also earning in your neighborhood. And I think this is one of the most exciting. There has never been.
So you're not going to change your own co-branded MasterCard?
No, we have a co-brand card. I think we're really excited about that. But I think the platform going from home and rewarding you on your biggest expense, rent, to now building that neighborhood loyalty and allowing these local restaurants, grocery stores, coffee shops to say, here's how you reach people in your local apartment buildings. Here's how you reward them for coming in regularly. That can be a game changer.
And talking of games, you also got Roger Goodell joining. I mean, NFL. It's all about building loyalty. Remind us how you're getting paid, because people are coming onto your board and giving you money because you've got a really strong revenue stream here. You are taking a cut of each of these purchases?
So this is, yes. The short answer is yes. And I think what's so exciting is we didn't have to reinvent the business model. We had to build the ecosystem, right? Loyalty programs exist in airlines and hotels. They make money from their merchant partners when they drive spend. They make money from their co-brand cards. What we've also done in addition to that is build the biggest payment processor for rent payments on top of that. And so you allow yourself to be profitable and generate revenue from how people spend on rent, when you help drive spend to local merchants, when people use your co-brand card. And that ecosystem together is really what makes this unique and differentiated.
Anchor, I've got to go back to the rent issue. I mean, for so many people, paying rent is painful, right? You kind of view it as a futile exercise where there's no equity reward. You don't get any of the tax benefit of owning a home and paying or deducting the mortgage interest.
It's crazy.
It's crazy, but what is the market for it, right? Is there a clear demographic in the customers that came to you and said, yeah, I like this? Is there a geographic concentration?
Yes.
You know, the market here in SF and New York is well known.
It's a great question. Renters are all over the country. I think what's important to understand is most Built members are in that 21 to 35-year-old demographic. You're at this point in your life where buying a home, it's not just about affording a home. You're at a point in your career where you're moving around. You want the flexibility. You're living in San Francisco, then you move to Chicago or Atlanta or Dallas or Denver, right? The problem, like you said, is that historically you haven't gotten anything back for paying rent every month. And so with Built, you earn those points, which you can convert into airline miles and hotel points. But as you might remember when we came on here a few years ago, one of the things we spent 18 months working with Fannie, Freddie, and FHA on is to allow people to use points towards a down payment on a home and use your rental payment history to build your credit and help you qualify for a mortgage. So what's exciting about that is you pay your rent at any apartment with Built using any credit card, debit card, or bank, right? And then as you build your points balance, you're also building your credit history. So if you decide to then buy a home when you're ready, you have a head start.
I'm interested, very briefly, on ultimately how you continue to expand. And is it about talent right now? The money you said you raised, didn't need to, fortunately, but where do you put it to work right here, right now?
So I think there's two different parts of this expansion that's really exciting. Today, we have over 50% of the top 50 residential owners and operators already in the Built Alliance. I think now we have an opportunity to really scale across the long tail of the multifamily, but we've also now expanded into providing rewards on single-family homes. Condos, we just rolled out our first set of condos here in New York with Douglas Elliman, and mortgage servicing. So even homeowners can start to participate in this rewards platform for paying their mortgage and being in their neighborhood. So that's one part. And then the second part, which I think is, again, it takes time, and it's, this is what American Express and Visa and MasterCard have done, is bring in all these local merchants and say, look, we can be a plug-and-play neighborhood loyalty platform for you. Here's a way to reach people when they move in. I mean, people don't realize 50% of renters move out every single year. So all those new people moving into the neighborhood, we make it really easy for you to reach those customers, introduce your local restaurant, and give them rewards and benefits as a local, the person who's most likely to come in on a Monday evening, the person who's likely to come in 2-3 times a week. I think that is a powerful ecosystem and community we can build.
Built Rewards CEO. Anchor Jane, great to have you on the show.
Thanks
Thank you.
for having me.
Ed, what have you got?
Yeah, crossing the Bloomberg terminal, some breaking news. Jon Stewart is returning to Comedy Central's The Daily Show. Starting February 12th, Jon Stewart will host the program every Monday. The idea is that he's returning after 9 years to take the show through this year's election cycle. A story we continue to monitor. This is Bloomberg Technology.
Regional sports networks. There's a lot of, it's a business that seems to be collapsing. Leagues have sort of toyed around with, should we do something ourselves? Some teams are doing like local TV and streaming. How do you see that shaking out?
So I don't think I'm right on this, but my instincts keep telling me this is what's going to happen. Because if you remember the WWE, they launched their own network that had their own content and had their own pay-per-views. And it was kind of a smart, bold, ahead of its time move. And then they pivoted at the perfect time and they sold their content to, what was it?
Peacock. Yeah.
And that was really smart too because they were able to leverage that number as high as possible. So they always zagged where the money was and when the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that themselves.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Thanks for calling Jersey Mike's. How can I help you?
What time do you close today?
We close today at 10 p.m. Can I help you with anything else?
Sandwich chain Jersey Mike's jumping into the world of artificial intelligence. Today, the company announcing a partnership with SoundHound AI to add state-of-the-art voice AI ordering. CEO Keva Mahaja, SoundHound CEO, joining us now. This is a big deal. How many stores? Where? When? How?
Thanks for having me. We are very excited about the announcement. Jersey Mike's has about a little over 2,500 locations. Usually brands like this start with 1 or 2 before they expand, but we are starting with 50, which is great. And we are starting the year with over 10,000 live locations across multiple brands and over 100,000 locations in our pipeline.
Kayvan, what is competition like for you now, given the world has suddenly embraced generative AI?
So SoundHound has 3 pillars of business. In the first pillar, we provide a branded AI assistant to products like cars and TVs, IoT devices. In the second pillar, we have AI customer service for businesses like restaurants and beyond. And in the third pillar that's coming in the future, we bring them together. So while you're driving, you can order food by talking to your car instead of talking to the restaurant, which brings our pillar 2 customers to our pillar 1, the users of pillar 1 customers. So something changed last year. Generative AI and large language models really changed the landscape. SoundHound is 18 years old. We've been developing the core technology in conversational AI for almost 2 decades. But when large language models change the landscape, it really accelerated our path to adoption. And competitors, the big tech players, have to build their own large language models, so it takes them a couple of years. And then the smaller companies...
Kayvan,
yeah.
We just have 10 seconds left. This is an exclusive deal, or you phone in Jack in the Box and Wendy's next?
It's not exclusive. We are in over 25 brands already. And like Wendy's, I'm sorry, not Wendy's, White Castle. And that's the one we've announced. And we can also power smaller brands, like it can be a single location sandwich shop, and we can use our AI.
Kayvan, great having some time with you. Come back, SoundHound AI CEO Kayvan Mohajer. That does it for this edition of Bloomberg Technology.
Was going to keep Rain World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He was a day trader. He taught himself, self-made day trader.
Yes.
And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot. You know, in many ways, it's convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Welcome to Bloomberg Markets. I'm Shonali Bassick. Let's get a quick check on the markets here. You're watching some green on the screen with the S&P 500 up about 0.7%. We're looking at some earnings stories really starting to shine here. We will get into them at the course of the day. The 10-year yield back toward 4.15, if you could believe it, just about a basis point or two higher on the day, but it has slowly been climbing higher. And remember, many investors now debating the value of that longer durated bond. The U.S. dollar index now down about 0.4% as well. And New York crude, here's where you get some interesting movements as well. You have 1.9% higher on the day. It has been quite volatile, but we are back above that $75 level, and we haven't seen levels this high for weeks since the end of December. I want to flip up the board here and look at those midday movers, things that are moving that equity market. Netflix earnings beating expectations. You have the stock up 12.2% higher on the day, and it's not the only place you're seeing just so much love in the technology industry here. You're seeing Microsoft hitting fresh records at $3 trillion in market cap now, and Meta Platforms as well, up 2.2% nearly on the day. Fresh records there to propelling its market value to $1 trillion for the first time since 2021. Both of these companies reporting earnings next week, so stay tuned for that. ASML as well on the rise by more than 10%, really being a bigger gainer in that SOX semiconductor index. The NASDAQ 100 and the SOX just getting so much love today. Now, we also got some economic data which showed encouraging signs for the Fed's rate path. Bloomberg's Abigail Doolittle is here to explain.
Yeah, Shonali. Well, we do, of course, have PMIs out this morning for the U.S. and the manufacturing PMI back in expansion territory above 50. It had been in a contraction. Overall, the composite PMI for the U.S. For the month of December at 52.3, excuse me, I think that's a preliminary for the month of January, 52.3. From a global perspective, though, it's interesting because we still have some uneven economic activity. The UK is also in expansion, but the EU below that 50, 47.9. So the EU economy is still officially in a contraction. Germany, a big piece of it, of course. And then Japan, we have a little bit of an expansion there. Let's break down the US PMI just a little bit more. This, of course, is ahead of the ISM release that will be out in about 2 weeks or so. And that, of course, there's not an overall composite. There's the manufacturing, which has been in a contraction, and services, a little bit of an expansion. But you can see we're really not moving in the right direction off of the pandemic peak where we had the overall PMI close to 70. So a booming economy off of the pandemic lows, and then sort of trough lining here, but going into the 40s in that contraction area. So the expansion right on the 50 or so, above 50, just a little bit, probably just right for the Fed. Enough economic activity, but not too much. However, there's so many people thinking that we are going to have this soft landing. Something that I've not heard a lot of folks talk about is the fact that the commodity index last year in particular down more than 10%. This is the Bloomberg Commodity Index in white, and in blue we're looking at the NASDAQ 100, which off of its October 2022 lows up nearly 60%. You can see this huge divergence, that red trend line really marking the decline for commodities. Both Vincent Piazza here at Bloomberg Intelligence and Mike McGlone, they're both saying that this move lower for commodities, Shonali, it's demand driven, which means that the global economy is not as strong as we would expect. And of course, some of those PMIs, again, still in contraction territory. I've heard at least some of these experts say that they think that there's a chance that this commodity weakness, it could suggest that there actually could be some sort of a recession ahead. What will that mean for stocks? Well, let's see if we get that recession. Everybody seems to think there's a soft landing, but the commodity complex certainly in a bit of world of hurt.
World of hurt, but a lot of green on the screen, a lot of conflicting signals, and we're going to discuss those conflicting signals with Claudia Sahm, the founder of Sahm Consulting and former Federal Reserve economist. We were talking about that commodity weakness and what it signals ahead. You've been pretty confident that a soft landing could be achieved. If you see some of these signals in other areas of the market, do you start to draw a little bit of concern?
Frankly, the news we got today is encouraging. What the Fed has said it's been looking for quite a while is a rebalancing. Right? So those manufacturing PMIs in 2021, that was because we had this massive shift from services to goods that was really disruptive. That's not balance. Right? So to see us get into something that could be sustainable, that is extremely heartening. Now, as you said, there are mixed signals abound. I mean, frankly, I'm happy there's more flashing green than flashing red, which is what we've had the last few years. And yet nothing is guaranteed as we go forward.
Flashing green over flashing red. When you look at the data and the strength you're seeing in the economy, how much confidence does it give you that things are running not too hot for the Fed to start to cut?
The Fed finally, after our experience last year where we had huge disinflation and growth stayed solid. I mean, frankly, above trend. And at the last press conference in December, Jay Powell said, we no longer think we got to have below trend growth to get inflation down. That's a really big deal. So they look at this, and again, they can look at it as rebalancing and not as, oh, wow, this is going to be so hard to fight the last mile. That's just not been the case. And frankly, there's good reasons to expect it not to be a problem going forward. This does not look like overheating.
Let's talk about some other indicators here. Just this morning, Torsten Slok over at Apollo sent out a note, and it said that the Fed has used the Taylor rule framework for decades to understand the Fed funds rate, and at the current level of inflation and unemployment, it shows that Fed funds today should be 4.5%. That's the case right there for the March Fed cut. What do you make of that?
So go tell Ben Bernanke that the Taylor rule tells the Fed what they should do, right? Like, that's not how the Taylor rule works. It's an empirical regularity. The Fed looks at it. They look at a whole bunch of different versions of it just to get a sense of what does this say relative to what Feds have done in the past. But frankly, right now is not like anything in the past. So yeah, I mean, I'm encouraged to see, and I think it makes sense given the improvements we've seen. And in particular, we have the real Fed funds rate, the inflation adjusted. We're on track to have that peak this year. The Taylor rule is like, oh, no, like inflation is down lower, unemployment is in a sustainable place. So it's a good not warning. It's a piece of information for the Fed, but it is one that they have and will continue to override if they think it's appropriate.
How do you think through the upcoming economic data, particularly the Fed's preferred gauge of inflation?
Friday ought to be a good day, right? I mean, the consensus forecast for both total PC inflation and core PC inflation is to have a 2-handle on both of them. The target has a 2-handle also. So we are getting remarkably close. This is not a slam dunk. Frankly, I have argued, and I think it is absolutely appropriate that the Fed begin cutting. They said they were going to do it before 2, and we're not that far. And yet, we'll take the data. Inflation is what everybody's looking at. The Fed is. That makes sense. We're getting good data. I mean, finally.
So to the extent you believe that the Fed should start cutting, how much and how soon, and where do Fed funds end this year?
The Fed is going to want to proceed gradually. I don't have a problem with that. I have a problem with them waiting until it is so painfully obvious that inflation is like really going to be 2. I think that's a mistake. Monetary policy acts with some lags. We can argue short or long, but there is some, right? And they're really putting millions of jobs at risk by just digging in their heels and not cutting. And yet once they get going, gradual. But if they wait until it's painfully obvious, then they may have to go faster in the second half of the year. Fast is disruptive. Like, let's just get it going. I think, a percentage point and a half by the end of the year off makes a lot of sense. Maybe not quite that much. They have at least 2 percentage points above what they think is neutral.
Feels like a long year ahead still, Claudia. When you're thinking about the risks to that soft landing scenario, what are you most concerned about?
The Fed. And actually, it's not the Fed going straight at consumers. I mean, American consumers, they're going strong, right? Retail sales look great. Jobs still are holding together, although some worrisome signs. There's still a lot of pressure on credit markets. I mean, this was a big increase in interest rates. There are different kinds of products that are going to have to be refinanced or renegotiated, like the commercial real estate loans. It would really help those markets if the Fed just backed off a little bit. Like, they've been holding up. So I worry they'll break something in financial markets, and that could feed back through to the economy. But so far, so good.
Well, how badly could things break? You think about March of last year, and there are a lot of people who didn't see that coming. To your point on the consumer credit, just in credit cards in America has surpassed $1 trillion, and you're barely feeling the bite of that yet. You're just starting to see the delinquency rates rise to pre-pandemic levels. Do things get really bad from here?
Well, no one can predict a financial crisis, right? Something breaking. There's always something lurking out there if enough pressure is put on it. So I don't want to hazard a guess what that is. I will say in March, the Fed and other regulators, they moved really fast with Silicon Valley. They got it contained. I mean, they put some really generous terms on the lending to get it under control. We might not be that lucky next time. Right, so I just think they're kind of pushing their luck, and we frankly have not had a real great run of luck the last 4 years.
Claudia Sam, we thank you so very much for your time. A lot of economic data still ahead and a big Fed decision. Now, coming up next, we're going to switch gears. We're going to talk to Tyler Dixon of Citigroup to discuss the 2024 IPO outlook and all that M&A outlook, appetite rather, that could or could not be out there today. This is Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much, much more than a bookkeeper.
One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We are like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
It's an amazing time to be in this role. It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. A new episode every month, only on Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg Markets, and I'm Sonali Basak. Investment banks and corporations across the world are banking on a rebound of almost every deal market. But is it here yet? Is it coming? To discuss more is Tyler Dixon, Citigroup's head of investment banking and vice chair of banking and international. There's been this big talk about a return of the M&A market in particular. We've been seeing some of it. But what does the future kind of look like at this point? The pipeline moving forward, is it as significant as people think?
Look, I think the market backdrop is very, very favorable right now, and I think we are optimistic about M&A, equity capital markets, and debt capital markets activity. As you would expect, it's pretty early to declare victory, but we like the secondary market conditions. We obviously have spreads and rates and equity prices right where we want them to be to create a constructive backdrop. So when we talk to corporations, the CEOs and boards we're talking to want to act and take advantage of the market conditions. If we see them continue, I think we'll see more activity. We see a continuation in M&A off the back of the progress in the second half. So more technology, more healthcare, more industrial, more energy deals, and we're feeling excited about our clients being prepared to act.
Those are a lot of sectors that you named. One big question mark has been the private equity industry. Can they get deals done in this environment and for the valuations they'd like to with the financing terms that they want? What is it looking like?
Great question. Look, I think the backdrop of stable interest rates and more stable spreads and a view that we're past peak interest rates and the likelihood that rates come down, I think creates a backdrop or a tailwind for private equity to step up. Many of them have a responsibility to return money to their LPs, and so we are seeing a big uptick in activity of them wanting to divest and monetize. We're seeing that in the M&A market. We're frankly also seeing it in the equity market, and if the equity markets continue at this pace, we'll see more IPOs on the sell side from financial sponsors, and with the strong bid that we're seeing in DCM, and the story so far this year has really been about DCM, I think we'll see investment grade markets work, but more importantly, leverage finance markets work. And if leverage finance markets work, our financial sponsor friends will be active.
Well, ECM, let's just start with that IPO market because
Sure.
we do have some names coming to market even in a week from now and the next couple of weeks. It's pretty interesting out there. But do you think that investors are going to be happy? The IPOs we saw at the end of last year kind of struggled here. It went post-trading.
You and I talked about it. We thought we saw some green shoots, and they sort of turned light green and then yellow. I think we're in a different market right now. We have several billion-dollar-plus IPOs out on the road. I think the IPO market is ready. I think we're seeing secular growth stories that have a combination of profitability, scale, and growth are the kind of things that will open this market. It's premature for us to predict how these are going to play out, but we have a strong equity market backdrop. Obviously, you know the story. High valuations, high multiples. I think if we bring these deals at fair prices, we'll see the data points that we need in the first quarter to really create a foundation for a very strong second quarter. Most of the IPO activity that we're working on right now was scheduled for the second quarter, but we're sort of pulling it forward. If this market holds, we're going to move faster.
Is it partly fear here? You almost look at the market and you think, why is it so calm? There's kind of a lot going on in the world right now. There's also a U.S. election around the corner. Do corporates feel like they need to move faster to get to market? here continue to sting Tesla, given they're kind of out of Tesla's control?
You're right. They are out of Tesla's control, and I think in some ways, Tesla has to just be receptive to the underlying market environment that you have, right? That you do have, broader questions on auto sales growth, and we are in sort of a flattish environment from a global light vehicle production standpoint. But then on top of that, from an EV standpoint, there is some slowdown right now that has to be managed in terms of subsidies that have come off in different regions and some other price cuts that they have to navigate through. So there is a tougher macro environment currently that they're going to have to navigate through, and that has to be factored into the volume and margin outlook for them.
Well, also worth asking you here, Dan, we don't often ask, the specific stock analysts to get into the macro here, but if the economy were to turn from a soft landing into something harder in the future, then what kind of impact would that have on Tesla?
Yeah, certainly, weaker macro would play a role. I think for much of Tesla's history, it was much more a story of supply constraints, right? That the volume was, regardless of the broader macro environment, but the volume for the most part historically for Tesla was simply a function of what their production output was. And you really are seeing for the first time, and this played out last year, and certainly the setup into this year, is that this is a demand-constrained volume outlook for Tesla. So to the extent that it is a harder landing and that the macro is tougher, the outlook for EVs is tougher, that's going to weigh more significantly on the outlook for Tesla.
How much is competition a problem? We've had a lot of conversations on this program about BYD and the ability to really become a significant competitor. Is there more to come on that front?
The competitive landscape really varies by region. If you look in the U.S., Tesla still has a clear lead, and actually what's happened in the U.S. is the legacy automakers have pulled back on some of their near-term EV aspirations because they simply don't have the cost structure that Tesla has. So in regard to the U.S., they're fairly well positioned, albeit if you look in the U.S. as Tesla competing against combustion vehicles, there's going to be some price downs that they have to navigate through that will be some pressure. China, though, is a slightly different scenario because you could see BYD clearly took the EV crown when you include both BEVs and PHEVs, plug-in hybrids and full battery electric vehicles. It is a more competitive environment. You see BYD really has figured out the cost side of it. But the main point I would say is it doesn't necessarily have to be an all-or-nothing outlook. There's still room for Tesla to have healthy share, even if BYD and some of the other domestic Chinese automakers are gaining traction.
Quick question here, Dan, because you had so many revisions here of expectations for Tesla leading into this moment. Where would the upside be if you saw more people come into the stock? What would it come from?
This is a question we're getting a lot from investors. And I think there's a couple things that you could see that maybe allow people to look past the choppier near-term fundamental outlook. Number one would be on Model 2 or the low-cost model. We got a headline on that this morning, really reiterating mid-2025 timing. So the more that the Model 2 trade starts to come in focus, that could be an opportunity because people generally see Model 2 as the opportunity for Tesla to get into mega scale. The other area is potentially around full self-drive. And we've gotten a number of different announcements from Tesla on that front. But anything that shows that Tesla is in fact gaining traction there, remember that is part of the valuation, that could be something that allows people to look past the near-term fundamentals. Our view, though, is that for now it's the fundamentals that are in focus.
Dan Levy of Barclays, thank you so very much for your time. We'll keep a close eye on those earnings after the bell. And if you can't get enough on Tesla and Elon Musk, like a lot of people can't, go check out Bloomberg's podcast, Elon Inc. It covers his business ventures and his influence anywhere you get your podcasts. Now, coming up next, we're going to talk about the private equity industry because it is looking to shore up their cash reserves to begin 2024. It's the focus of our Wall Street Beat up next. This is Bloomberg.
sports networks. There's a lot of, it's a business that seems to be collapsing. Leagues have sort of toyed around with, should we do something ourselves? Some teams are doing like local TV and streaming. How do you see that shaking out?
So I don't think I'm right on this, but my instincts keep telling me this is what's going to happen. Because if you remember the WWE, they launched their own network that had their own content and had their own pay-per-views. And it was kind of a smart, bold, ahead of its time move. And then they pivoted at the perfect time and they sold their content to, what was it, Peacock?
Yeah.
And that was really smart too, because they were able to leverage that number as high as possible. So they always zagged where the money was and where the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that themselves.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
This is Bloomberg Markets, and I'm Shonali Bassick, and it's time now for the Wall Street Beat, my favorite beat, where we look at what's buzzing on Wall Street and the world of banking and finance. And today, we're looking at the moves in private equity because they're looking to shore up their cash reserves. And for more, we're joined by Bloomberg's Allison McNeely. So much of this, Allison, as we've been talking about so much, is LPs, investors in private equity funds, want their money back. Describe that pressure to return money to investors.
You use exactly the right word, pressure. When private equity is going well, it's kind of a flywheel, right? You have money going out the door, making new investments, and you have money coming back, hopefully at 2, 3, 4, 5 times what you put into a company. So then you can return that money to your limited partners, to the investors who gave you cash and say, hey, look at all the money we made for you. Now, please give us more money so we can do more deals.
Well, it's funny. You say 2, 3, 4 times your money, but valuations have really changed. Aside from places like big tech, you're not seeing the same multiples you saw in the boom days of 2021.
Right.
So are they resetting expectations, and how drastically do they have to look at the light here?
So I think there is some movement around expectations and maybe the idea that things aren't worth what folks paid for them in 2021. But also, when you have money locked up for 5 or 10 years, you do have that time to wait and hopefully, see the market recover, see, interest rates come down, and the ability to transact to improve so that you can, ideally get the valuation at least what you paid in 2021. The reality is, sponsors are under pressure from their investors to return capital to them. And in order to return capital, you do have to transact. And so maybe, we might start to see some of that kind of capitulation, if you will.
Allison, we thank you so much for your time. That is Bloomberg's Allison McNeely, all over the private equity industry. And we're taking a quick look at markets here because we are watching record highs, or new highs rather, for many stocks in that NASDAQ 100. We're watching the S&P barrel higher about 0.7, 0.8 of 1% here. We're looking at that 10-year yield just below 415, pretty much just 1 basis point higher on the day. A lot of movement still in crude at about 1.2%, but really it's those tech indices that are getting most of that love. I'm Shonali Bassick, and that does it for Bloomberg Markets. Keep an eye on the day. We have a lot of earnings here after the bell. This is Bloomberg.
total prize money pool in LPGA tournaments has grown 50% since 2019. In 2023, it topped $100 million. But the prize fund still lags far behind what men compete for on the PGA Tour. The inequality hits hardest at the lower end of the money list.
Clearly, we want the top players to continue to make a great living playing. These are the very best in the world. But we also then dig in and say, okay, what's the 50th best player in the world making? And what did she make last year? I've asked Kathy to run numbers many times to say, okay, tell me where we are exactly during the middle of the season, at the end of the season.
That 100th player, our goal would be to obviously have that player make considerable amount of prize winnings. And we're going to work really hard to do that. Having said that, we do need to continue to focus on ways to provide opportunities so that 100th best player can cover those costs that it takes for them to be out here on the golf course. That's hiring a caddy, that's travel, that's strength coaches. We're helping to provide stipends for health insurance or create a tour-wide health insurance program. Ability to create more discounts for travel, for hotel and car and all those things that really cost them a lot.
To meet these objectives, LPGA leadership collaborates creatively with sponsors.
We've worked with some of our corporate partners to say, help us solve a problem. Help us create a fund that will allow our players to get to the first tee ready to reach peak performance.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, live around the world every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg. From the world of politics to the world of business, this is Balance of Power.
Thanks.
Live from Washington, D.C.
Will the donors keep Nikki Haley in the game? Welcome to the fastest show in politics this day after the New Hampshire primary, with a lot of questions surrounding the results and whether Nikki Haley has a path and another big win for Donald Trump. We're going to get into this coming up with someone who knows. Andrew Smith from the University of New Hampshire Survey Center will join. Kaylee Lines, my partner in crime, still on the ground in Manchester, New Hampshire, will have a live report for us as we try to figure out the path forward here on the road to the White House. We start, as always, with a look at Wall Street. Let's get to that in New York with Charlie Pellet. Hey,
Charlie. Thank you very much. Joe Matthew, here's what's going on. 49.01 right now on the S&P 500 index. We are at the best level of the day. Dow Industrials pushing higher. Dow right now, 38,024. The Dow up now by 118 points, up by 0.3%. We got ourselves a Wednesday rally with the NASDAQ Composite Index up 189, up 1.2%. NASDAQ 100 up 243, up by 1.4%. Stocks are pushing higher. Traders remain positive about the American economy after a fresh batch of data this morning. Topped estimates. Tech companies reported robust earnings. Speaking of which, Netflix shares, they are surging now. Netflix up by 12.2% after last night's report. We will be hearing from Tesla after the close of trading today, along with IBM. Right now, we've got Tesla shares gaining 0.9%. IBM today after the close of trading down by 0.1%. 10-year yield, 4.14%. The 2-year yielding, 4.36%. Spot gold up down 0.6%. 2018, the ounce on gold. West Texas Intermediate crude up 1.1%. 75.22 a barrel. Microsoft shares powering higher, up another 1.4%. Microsoft now a $3 trillion market cap company. Again, recapping, stocks higher, S&P up 33, up by 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, we thank you. and welcome to the fastest show in politics, Bloomberg Balance of Power, the Wednesday edition, this day after a pivotal decision in New Hampshire. And greetings, welcome to everyone on Bloomberg Radio, TV, and YouTube. As we read the tea leaves and try to figure out exactly what we learned last night in New Hampshire, that is where we find my partner in crime, Bloomberg's Kayleigh Lines, still on the ground. Kayleigh, after any big party, there's usually a hangover. What did the hangover feel like this morning in New Hampshire?
Well, on the one hand, it's kind of an idea of resignation, the idea that now the general election has begun. Former President Donald Trump is the presumptive Republican nominee at this point after only 2 contests, Joe. It frankly is remarkable. But on the other hand, there also is the question of what still could come next. Nikki Haley has said she intends to stay in this race, take it to her home state of South Carolina on February 24th, potentially even to Super Tuesday, where 11 of those 16 states have open or semi-open primaries, as she is still trying to compete and potentially find a way, if any, to at least continue collecting delegates, if not outright get the nomination. Because, of course, Joe, we're still talking about a 6-month time period between now and the Republican convention, and especially given the litany of legal issues the former president is facing, there is still some room for things to change here.
You said it. Kayleigh, I've been looking for data on South Carolina, and the most recent credible poll brings us back to the 5th of January. An Emerson poll gave Donald Trump 54%, Nikki Haley 25%. And back then, Ron DeSantis was still swinging. He had 7% in this poll. Great questions about whether these numbers have changed at all in Nikki Haley's favor following Iowa and New Hampshire. But I wonder if it matters, with Bloomberg reporting now that this meeting of big donors later on this month in New York is still on. As long as the money keeps flowing, she stays in this.
That's right. If the tap doesn't turn off, then it continues to give her resources to keep this candidacy moving forward. We already know they have made a monetary commitment in South Carolina, already more than $1 million in TV ads purchased. The campaign told us here at Bloomberg, here in New Hampshire, just a few days ago, that they intend to spend $4 million on advertisements in the state. So that really is an investment in Americans for Prosperity Action, that Koch-backed PAC that we know is supporting her, who we actually spoke with this week, Joe, has said they're already on the ground in South Carolina. They will stay there so long as Nikki Haley is still in the race. But will the tap keep that flow running, Joe, is going to be the question. Obviously, that fundraiser you're referring to 6 days from now in New York has some billionaires, well-known names on Wall Street: Ken Langone, Henry Kravis, Stanley Druckenmiller. If those kind of big money individuals are still behind her, there isn't really a reason why she couldn't keep this up, even if she may get politically damaged in the process, if she's getting attacks from Trump's base of supporters and potentially has a bad showing in her home state where she served as governor.
Something else. Up late covering the results from New Hampshire and up early reporting here on Bloomberg TV and radio. My partner, Kayleigh Lines. Get home safe, Kayleigh. I'll meet you back here in the nation's capital. Another incredible experience here covering Iowa and New Hampshire back to back. By the way, the final in New Hampshire, Donald Trump 54, Nikki Haley 43. Remembering the poll that we walked into this from Suffolk University, it said 60% for Donald Trump, but of course, this had a lot more to do with the trajectory of these two candidates, not necessarily predicting the spread. And that's where we start our conversation with somebody who not only knows polls, but New Hampshire as well as anyone here. Andrew Smith, director of the University of New Hampshire Survey Center, is back with us. He's been a reliable voice, as always, through this process. And Andrew, it's great to see you this day after. I wonder your thoughts, because we were speculating, we were wondering what was going to happen 24 hours before the contest. You were with us here on Bloomberg. Did New Hampshire just pick the Republican nominee?
I think so, unless something dramatic happens between now and the convention, either legal or medical or who knows what else it would be. But it has to be incredibly dramatic for Trump not to get the nomination. I think that maybe the only outside chance that Haley has, and I think maybe this is why she's continuing to go, is if she's a viable candidate and can build up a certain number of delegates, she may be able to be in a position, should something happen, to be seen as the next most logical Republican to be the nominee for November. But it would really require on something outside of control of the campaign.
Isn't that something? So there's almost no point in advertising. Just wait around and see what happens, I guess. Some of the data that we pulled out of the voting last night Andrew, among independent voters. I'd like to hear from you on this because they, of course, characterize New Hampshire in a very special way. Among independent voters, 66% said they would not vote for Donald Trump in November if he was the nominee. What does that mean to you as you look forward to a general that could already be underway?
Well, I would say first off, we have to discount there may be 10% or so of those independents who voted in the primary yesterday. They're really Democrats. They vote actively Democratic typically. They're not going to vote for Trump regardless. But what I've seen over the history here in New Hampshire, but also in the history of political science going back to research published in the 1960s, is that the partisanship is such a strong driver of what goes on. And my sense is that those Republicans who say they're never going to vote for Trump, they'll rationalize why Trump is better than Biden when it comes around to November. It's like, yeah, we know he's a skunk, but our skunk is better than your party's skunk. So you'll see a lot of that. We heard that in 2016. We heard that in 2020 as well from Republicans.
Right. Yeah. Well, I'll tell you what, there are a lot of questions about how Nikki Haley is going to spend the next 4 weeks. How can she learn from what happened in New Hampshire to potentially improve her chances here? Because the makeup in New Hampshire is like a different universe from what she's going into in South Carolina.
I don't know if there is that much to learn from New Hampshire because, frankly, I think she ran an excellent race here. She did about as good as you could expect anybody to do, where you've got Donald Trump getting a significant majority of those registered Republican voters. She played the only hand that she had, but the cards were relatively weak, and she did an excellent job with a weak hand. She's going into South Carolina where her cards are even weaker, not because she's not popular in the state and she's better known, but South Carolina's electorate, they elected Donald Trump significantly in 2016 and in 2020. And I don't think they'll see any reason why they should throw him overboard, even if it is for a governor that they know and like.
Your poll, Andrew Smith, of a little less than 2 weeks ago had them within single digits. That changed pretty quickly as candidates began dropping and as they moved through Iowa. When are we going to start seeing indications of how the Ron DeSantis votes were distributed? And how did that change so quickly in a week's time to go from single digits to what we got last night?
Well, I think it's important to remember that Donald Trump had about 40 to 42% of the electorate in New Hampshire locked up a year ago, if not 8 years ago. So his voters were there. And then you had a lot of people that were looking at other ones. You had the anti-Trumpers with Chris Christie. You had Nikki Haley trying to play a middle road. You had the Trump light candidates with Ramaswamy and DeSantis. But those in our polling, when Christie, if you ask Christie voters who their second choice was, it was Haley. And when he dropped out, they moved over to her. That's why she got this bump. But when first Ramaswamy and then DeSantis dropped out, their second choice was always Trump. So they drifted over to Trump. It was not a question in this election of Trump versus everybody else, or the anti-Trump. It was Trump, the Trump light, and the anti-Trumps. And the anti-Trump went for, instead of Trump light, they went for full strength Trump.
How about that? Sounds like that 30-point spread that I mentioned in the Emerson poll in South Carolina might still be the case. How about no labels? They've already come to New Hampshire a few times. I've seen Joe Manchin up there holding events on a potential third-party run. There's something New Hampshire-y about that, Andrew. If we get to Super Tuesday, do you take that group at its word that they will run a candidate? And how could it possibly work when they aren't going to be likely on the ballot everywhere?
Well, I think any third party is going to be a spoiler. And basically, you're going to have to start to look at who they're drawing votes from. And it's really way too early to start to even think about those things. Voters aren't paying that much attention, frankly, to the general election in the fall yet. They are in the early states like New Hampshire, Iowa, and then now coming up South Carolina. But the third party is going to have a very, very difficult challenge. As I mentioned, the voters in the United States can rationalize why their party is as bad as the candidate is better than the other party's candidate. And if you think back to third-party candidates in recent memory, it was Ross Perot. He got 19% in 1992 with two kind of
amazing
candidates, but he didn't get a single electoral vote. He was a spoiler at best, not a really credible candidate for winning the election.
Not that we don't already have potential spoilers out there right? RFK Jr. We've got third-party candidates that I could rattle off here that don't necessarily carry the no labels brand. What's the difference?
Not much, actually. I think RFK Jr. is probably in a better position than the no labels brand. They're not a known commodity. They're not a party in the traditional sense of a party. They're a movement, so to speak, at best. But they're going to need somebody who is a very charismatic person, very popular, very well known, who's going to be able to lead the charge. Because I don't think people are going to go and vote for a relatively unknown candidate that they don't know how they're going to govern, who will have no governing party in Washington, than looking at who their own candidate is and saying, you know what, I'll just stick with the tried and true, even if I don't really like it.
So add up RFK Jr., Cornel West, and the rest. Is there already enough potential interruption for Joe Biden to worry about? Sounds like yes.
Yeah, I think there is. I think that both candidates have to worry about this. It's just really too early for us to say who it's going to bite the hardest.
Yeah.
You can make an argument both ways, but I think it's too early because, frankly, again, voters aren't paying attention much to this. Voters will pay attention to the elections when they have to, and that's usually just before the election. The money issue is important for the candidates and the campaigns. How do you keep this thing rolling if your candidates aren't that popular? How do you keep voters engaged when they're looking at their candidates and neither party really is in love with their party's candidate? How do you keep them focused? And that's a hard thing to do.
Strikes me, Andrew, that if Donald Trump wanted to give this the appearance of shutting down the Republican primary, you just go ahead and announce a vice presidential pick right now. Remember when Ted Cruz tried to pull that off? Just form your own ticket before you even get to a convention. I don't know if you see that happening. It feels like something very Trumpy thing to do. Who's on the top of that short list? Will geography matter this time? Or are the normal rules in place, or does Trump seem to be the exception to that as well?
I think Trump's not likely to pay attention to the traditional things like choosing somebody from the other wing of your party or choosing somebody for their ability to draw votes in a battleground state or a large battleground state. I frankly think he's going to get a loyalist, somebody who's going to parrot the message that he has, who's not going to stray or say something that he might disagree with. And he's going to want somebody who's going to back him up in those legal troubles that he's got. So I think he's going to want somebody who's got an oath of loyalty to him. And I don't think that that's going to turn off the Trump voters. In fact, I think his supporters, if anything, want to see somebody like that rather than somebody from another wing of the party.
So you're talking at least Stefanik, a couple of other names around there. Kerry Lake might ring true to you. What do you think, Andrew?
I think that both of those people could be on his short list. They'll probably have to swear on a stack of Bibles that they'll pardon him if need be. But I think it's going to be tough for them to find somebody who has some national credibility, who's with Trump, who's not going to stray away from Trump, and who's not going to look like somebody who's been effectively politically neutered if they join the campaign.
So then if it's the Trump campaign and no rules apply, that choice that's so important for presidential candidates probably won't move the needle in the polls, right? This is the most stable looking race that we've ever seen when it comes to Trump's base.
I think so. And actually, if you look at the political science on it, the vice presidential pick generally doesn't make much difference at all. John Nance Garner famously said, it's not worth not worth a warm bucket of, as he said, spit, but he meant something else. It's not something that really the voters are waiting for. It's kind of a news story a bit. It's something to talk about during the convention when it's traditionally announced, but it's just not that big of a deal. And but in this case, we have two very old candidates for whom the choice of vice president looms a little bit larger than might be the case if the president is 50 years old. And that's going to be, I think, the discussion is how young, how vigorous, and how this person would look as potentially a president before the end of the current president's term.
I've got less than a minute, Andrew Smith. Some suggested while I was in Manchester that the primary was broken. Is it going to be like the good old days 4 years from now?
there were many things that happened. You walked on the streets of Manchester this weekend, it looked like a ghost town compared to past primaries.
It sure did.
The Democratic Party took the big step of essentially bypassing New Hampshire for the first time. They wanted to do it for decades, but they finally took the step. The Republican primary, it wasn't that interesting because of an incumbent. Perhaps the lull that we saw this year was due to the candidates in particular situations. But people have been after.
I want to see the carnival come back to town, Andrew Smith. It's great to see you again from the University of New Hampshire. This is Bloomberg.
The head of USAID.
I got that job when I was 36 years old.
36 years old. You're running USAID. How many employees does it have?
We had 11,000.
And did you feel qualified to run something that big?
I did until, the work started.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader. Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
In many ways, it's convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 1:21 on Wall Street. I'm Charlie Pellet. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ holding on to gains. We are off session highs right now, looking at a 27-point gain in the S&P 500 index at 4892, up now by 0.6%. Dow Industrials up 58, up by about 0.1%. The NASDAQ Composite Index up 156, higher now by 1%. The NASDAQ 100 up 207, a gain there of 1.2%. 10 10-year at 4.16% with a 2-year that's yielding 4.36%. Gold down 0.7%, 2014 the ounce for gold. West Texas Intermediate crude 75 even, up 0.8%. Bitcoin up a 1.2%, now at 39,665 on Bitcoin. AT&T shares down 3.5% after the telecom giant projected 2024 earnings that fell far below analyst estimates. DuPont shares plunging 13%. DuPont, the chemical maker, said tepid demand from China is weighing on first quarter sales. Again, we've got the stock down now by about 13%. Big news coming up after the close of trading today. We will be hearing from Tesla and IBM. Tesla right now ahead of earnings, up 0.6%. IBM ahead of its report, lower by 0.1%. Recapping, stocks are higher. S&P now up 28, gain there of 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Balance of Power with Joe Matthew on Bloomberg Radio.
Joe Biden and Donald Trump have something in common. They're both acting like the general election is now underway. They say it began last night. If you really look at the statements they both issued, listen to Donald Trump's speech, certainly. And that's why Joe Biden's day today is important, not with an eye on South Carolina, but Michigan, where today he's expected that the UAW will endorse his presidential bid. Remembering Joe Biden became the first president to walk a picket line, and his support of the UAW strike against the Big Three. We assemble our panel for their take on what happened last night and what may already be happening, even as Nikki Haley vows to stay on in this race. Lester Munson is with us, principal at BGR Group, Republican strategist, along with Alvin Jordan, Rock Solutions Vice President, Democratic analyst. It's great to have both of you with us here. Joe Biden is acting like the general is underway. Alvin, would this endorsement from the UAW, which Donald Trump is also seeking, help him along the way in the months ahead?
Absolutely. I think regardless of what happens with Donald Trump and Nikki Haley, for President Biden, he for sure has to get on the campaign trail because it has started in effect for him. And the first thing from a priority standpoint that he has to wrap up is support. And if he can't, secure this, it would for sure put a wrinkle in his plans for how he would like to roll out his campaign officially. So he is, as you could imagine, there, trying to cash in on some of that goodwill. As you mentioned, as the first president to walk the picket line to actually come up with some official support, and I think he definitely needs it.
Well, so I guess that move paid off. It was considered controversial at the time here, Lester, but we also spoke while that was going on, while the strike was underway, about the fact that rank and file union workers, auto workers in Michigan voted for Donald Trump in 2020. What will this do to change their vote? Do they follow Sean Fain and the leadership here?
Well, that remains to be seen. I suspect the rank and file is not going to follow their leadership on this issue. This is part of the Trump populist appeal, right? He's reaching out to the kind of the regular Joe past the elites, in this case, the union leadership, or that's certainly what he's going to try to be doing. This is a weak spot in the Biden coalition. So the fact that the President Biden, is acting like this is a general, I think he has to be doing that. It is very likely he's going to be facing Donald Trump. And this is a demographic that Trump is going to pursue aggressively and relentlessly. And so this is, you're absolutely right, Joe. This is the first step for the president in the general election.
How about that? I'm drawn to the headline on the front of the union leader, the New Hampshire union leader, which just days earlier endorsed Nikki Haley. Alvin, you saw the results last night. Another big win for Donald Trump. The headline, voters say they were motivated by Trump one way or another, suggesting that you had passion on behalf of his supporters and passionate protest votes by those, in many cases, independents who voted for Nikki Haley. Is that a strategy going forward? If you're the underdog and you're a protest vote as opposed to something people are voting for, can you sustain a campaign in that environment?
No is the short answer. And unfortunately, in one of the opinion pieces, I believe in the Times this morning, they used a phrasing of a lovely illusion, and I think that is so accurate in kind of where and how we've arrived today. I was in Iowa and actually got to hear some of what Nikki Haley was saying, and I looked around the room to take a quick inventory, and it very much seemed like she had the people on her side, as it were. And then, as we all know, it didn't go in her favor to the point of third place. And so I just think that we're seeing come to fruition a lot of what is and sounds great. I mean, even in the midst of, allegations and actual, court hearings where we see the former president out front and literally dealing with all of this, and people still show up by and large to support him. And so, again, I think from a President, Biden's point of view, you have to activate and believe that this is happening, and you can't really allow, whether Nikki Haley will stick around or kind of where she's arrived personally to slow down the momentum that they'll need to garner support. Because if they do, I think what we'll look around and see similar to 2016 in a different way, but definitely, where we are now, which is people show up, support, and vote for the former president pretty consistently.
Well, I'll tell you, the conventional wisdom this day after the primary is that this is over, that Nikki Haley will eventually have to drop out of the race here. But she's got a lot of money, Lester. She's sinking $4 million into ads in South Carolina. At what point will she need to win something to keep this rolling?
Well, pretty soon. She's got a plausible case to make, right? South Carolina's her home state. She knows it. She's going to have to figure out a way to overcome this apparent 30-point gap with Trump. Can she appeal to Republican women voters? Can she appeal to those folks who are skeptical of Trump? Does he make some more mistakes on the stump? Does he have a health issue? Her being in the game might change it a little bit. This is a crazy year. I think it's a mistake to predict too much. Certainly Trump is in the best position here, but we've also got to look to see, the longer this goes on, the less likely it is that Trump is going to be able to prevail in the general. He's going to have to make a pivot to appeal to a broader range of voters. He's got to try to appeal to independents. He's got to try to appeal to Republicans who are skeptical of him. If he doesn't do that soon, it's going to become harder and harder and harder to do as this campaign goes onward.
Talk to us about independence, Alvin. Among those who voted in New Hampshire, a state defined by its independent, or as they say, undeclared voters, 66% said they would not vote for Donald Trump in November if he was the nominee. That's advantage Biden.
You would like to think, and I think for the for the president, like that is an area where you have to go and try to capture as much of that as soon as you possibly can. I think again, to the points that we've made just previously, how much of that is actually real. I was taking a quick look at a couple of the town halls that were broadcast yesterday after the polls had closed. And even in the room, you could tell as people were kind of on the fence from an independent standpoint of not wanting to declare a vote for President Trump, that it still seemed that when it came down to it, they would, essentially toe the party line, or even from an independent perspective, kind of look that way. And I just don't think that you can necessarily trust that I will vote against President Trump will actually hold true. And if you're President Biden, I think you have to immediately, start trying to appeal and pull in some of those voters who are seemingly on the fence. Otherwise, I think we end up, as we have in the past, and are looking at another Trump administration, if that's a segment of people that the current administration can't pull to their side.
We're about to get crushed with a lot of ads, and having just survived Iowa and New Hampshire, they're still rattling around in my head. We've got less than a minute here for this part of our conversation. Lester, Nikki Haley's got 2028 to think about, a much longer road ahead than Donald Trump needs to worry about. A massive embarrassment in South Carolina, where she's polling now 30 points behind Donald Trump, could impact her chances down the road. Is that something she needs to avoid?
Who knows? I think all the old rules are out the window. Is DeSantis a plausible candidate in 28? Is Tim Scott? They've taken some hits and gotten some extra baggage here as they got out of the race. I don't know that there's a real good formula here for Nikki Haley. I think I like the fact that I confess I'm a little partial to her. I like the fact that she's fighting. I think that's going to resonate well for her. She is going to have to figure out, if she does this again in 4 years, assuming she doesn't get it now, how to appeal to those Trump voters. And being a little pugilistic might help her do that.
Great analysis from our panel. It's amazing what happens when you actually get some votes instead of just polling and forecast to talk about. Democratic analyst Alvin Jordan, Rock Solutions, Republican strategist Lester Munson from BGR Government Affairs. Many thanks for the insights today on Balance of Power. Let's keep you up to date now with world and national news. For that, we turn to Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Hey, Joe. With aid to Ukraine still under debate on Capitol Hill, the top Senate Republican is pressing for immediate action. Senate Minority Leader Mitch McConnell spoke on the Senate floor today.
It's in our interest to help blunt aggressive behavior before it triggers wider conflict and directly threatens our closest allies and trading partners.
McConnell's comments come as there's word that negotiators are very close to an agreement that would lead to more foreign aid, along with policy changes at the U.S. southern border. Boeing CEO Dave Calhoun is meeting with senators today and tomorrow as the company faces questions about its quality control and aircraft safety. This following a mid-air incident earlier this month. While speaking to reporters on Capitol Hill this morning, Calhoun was asked if he's confident in Boeing's planes.
I'm here today in the spirit of transparency to, number one, recognize the seriousness of what you just asked. Number two, to share everything I can with our Capitol Hill interests. And answer all their questions, because they have a lot of them.
Calhoun says Boeing does not put planes in the air that, quote, it's not 100% confident in. Hoping to close a funding gap, New Jersey budget officials say transit riders face a 15% fare increase. That would help close a $107 million deficit for the fiscal year that begins in July. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much, much more than a bookkeeper.
One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We are like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
It's an amazing time to be in this role. It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. A new episode every month, only on Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
That's a question I get all night.
Bloomberg, top experts, great questions.
So I notice in a couple of drugstores, even in my area, which is not the poorest area in Washington, D.C., it's a nice upscale sort of area. When I want to get razor blades, you have to go to the front of the place and ask somebody to unlock it. Why are you locking up razor blades and other things that I might want to buy?
Yes. So, this is a national problem. And, this isn't, random theft. This is organized crime. And, state legislation has put guidelines on, how much the theft that you can steal before you're convicted. So it's $1,000 limit. But we have been partnering with other retailers and sharing our camera feed. I know some of our partners here from Walmart are here, but we are all part of an organization that's coming together that says if we can put our camera feed together and tell that person has been in our store and their store, and the numbers are higher than 1,000. So we've been able to impact these theft rings most recently.
What are the things that are unlocking key the most? What are people trying to steal the most, other than razor blades?
I will tell you, it started at razor blades because that's such a high-ticket item, but, it's a lot of cosmetics. But really what happens is that they take advantage of what I would call the elbow move, and they just come in and swipe the counter. And so it's just a matter of categories now.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Top names in climate finance are on Bloomberg.
I can't tell whether you're optimistic or pessimistic about climate finance.
A lot of great stuff is happening, but is it enough? No, it's not enough.
I'm biased. I'm a huge investor in both fission and fusion, and hoping that it comes in time.
Transition is not going to be an event. It's a process.
But at the end of the day, it's the right thing for the planet, it's the right thing for the industry, and there is business opportunity.
Your fixed income fix. Watch Bloomberg Real Yield at its new time Friday at 12 p.m. Eastern right here on Bloomberg. Context changes everything. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ holding on to gains. We are, however, off our session highs. 19-point gain right now in the Dow Jones Industrial Average. Little changed, up less than 0.1%. S&P 500 index advancing now by 22 points, up by 0.5%. 48.87. We were trading briefly above 4,900 on the S&P. We've got the NASDAQ 100 index higher now by 182 points, up just over 1%. The NASDAQ Composite Index up 132, now up by about 0.9%. 10-year yield 4.17%, with a 2-year 4.37%. Gold down $14 the ounce to 2014, drop there of 0.7%. West Texas Intermediate crude 75.03 a barrel. WTI up now by 0.9%, while Brent, the global benchmark, 80.04 a barrel, back above 80 on Brent, up by 0.6%. Bitcoin right now up 1.6%, 39,807 on Bitcoin. Spirit AeroSystems holding shares higher after a report in the Seattle Times saying the company was not responsible for a fuselage panel that blew off midair on an Alaska Airlines flight earlier this month. Spirit AeroSystems shares, they are gaining today. Right now, Spirit up by 6.7%. Boeing also rallying. Boeing shares up now by 2%. After the close of trading today, we will be hearing from both Tesla and also IBM. Tesla shares up now by just about 0.2%. IBM shares, they are lower by less than 0.1%. Little changed. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Balance of Power with Joe Matthew on Bloomberg Radio.
There's still no text. We've been waiting for a border deal to emerge from the Senate for weeks now. Remember, before the holidays, it seemed to be imminent. People were speaking optimistically about progress in the face of division on Capitol Hill. They've still not generated a bill, and there are a lot of questions about what might happen if they do not imminently. Or even if they do, is it dead on arrival in the House? That's where we begin our conversation with Megan Scully, who runs our congressional coverage here in Bloomberg's Washington Bureau. It's great to see you as we turn our attention back to Capitol Hill this day after the primary. We kind of took a beat there, but rest assured, immigration was the number one issue, as we learned, far and away on voters' minds, conservative voters in both Iowa and New Hampshire. And it's not feeling like this is coming very easily. There was this luncheon, Republican luncheon in the Senate behind closed doors that apparently boiled over. Reporting from inside the meeting says this devolved into shouting and name-calling, kind of like it has been in the House, Megan. Has the ship sailed here, or are we going to see something emerge in the next couple of weeks?
Well, there's a reason why we haven't seen an immigration overhaul in a generation, and that's because it is such a difficult political needle to thread. And when you couple that then with Ukraine aid, which that is what they are doing, at least in the Senate, that makes it even more complicated. The various factions in both parties that need to sign on need to get, all need to have their inputs into the legislation.
Yes, right.
They do seem to be getting closer, albeit ever so slightly. There's a meeting this afternoon that could prove decisive or not. We'll see. But, there's still lingering disagreements over spending on it, spending always being an issue on Capitol Hill, on detention, parole possibly still might be an issue, and then on Ukraine as well.
Well, you're right. I'm glad you mentioned that, because a border deal would be coupled with funding, and a lot of funding, $60 billion that would be geared toward Ukraine, although much of it invested here. We heard from the former Speaker of the House, the man who got fired for making a deal with Democrats that the current Speaker might be about to do. Kevin McCarthy talked to our colleagues on Bloomberg Surveillance this morning. Here's his take.
Let's talk border. Ukraine and supplemental is different. Do I think it gets done? I think it's very difficult. Every day that progresses, less likely. But remember, in the House, you passed a bill. When we were Speaker, we had a 4-seat majority. Well, we passed the strongest immigration bill, border security, that we've ever done. We haven't been able to do it when we had a 30-seat majority. And what you've watched, that sat over in the Senate, they have not acted. That's a Senate majority. The president hasn't taken any administrative action. You've got now the president even saying the border is not secure, something he hasn't said in a long time. He's got his own secretary saying something different.
Okay, so now there's a man who can speak freely. And of course, he has his own political interests and his own messaging that he's trying to get across when he comes on Bloomberg like that, Megan. But is the optimism that we're hearing misplaced?
I think that it is coming from the Senate is coming towards a deal. Whether or not that can pass the House, or whether or not it would even be taken up in the House, is very much an open question. So the Senate is just the first hurdle, and perhaps the easiest hurdle of the bunch here. Because then we get to the House, and you have Speaker Johnson, who is going to have to really decide here whether he's going to put his, just like McCarthy did, put his career on the line over this. He's already had some members of the far right, including Marjorie Taylor Greene, who has said she would vote to oust him over this Ukraine aid issue. You have some ultra-conservatives who are very opposed to Ukraine, and they're not willing to settle for anything less than the full Republican tax package. And you have Donald Trump weighing in on this as well. He wants...
That's the wild card, isn't it?
Yes.
He doesn't want to see a deal. It doesn't matter how good it is for the country, because it would actually help Democrats in the cycle, beginning with Joe Biden, wouldn't it?
Yes, absolutely. That is the other key here, is that you have conservatives who don't want to be handing Biden a political victory. Immigration, as you said, number one issue in many states heading into the 24 election season, including areas where Republicans want to hold on, but then areas that Biden has to flip in order to beat Trump.
Taxes, on the other hand,
Yes.
of all things, might see the light of day here. I'm amazed by this. Just wait around, I guess, long enough in Washington, you'll see something happen. Can't figure out how to fund the government. Can't get a deal on the border. Can't help our friends in Ukraine or Israel. Can't even have a meeting without people melting down into some kind of a fight, Megan. But we're going to have apparently an important tax deal move ahead that expands the child tax credit in return for more friendly business taxes. Will it be passed?
It sure looks like it. I would say of everything that we have on the table right now, this is the thing that looks most likely.
It's a deal between the House and the Senate, so feasibly, whatever they come up with would stand a chance in each chamber.
Yes, and it is very much like an old-time Washington deal where there's something in it for everyone to hate.
Right, which means it might work.
Yeah, perhaps. Okay. It passed the Ways and Means Committee on a 40-3 vote, I believe, which is truly remarkable. Yeah. But we have not seen Republican leaders weigh in on this yet, and that is the big question here. It has tax breaks for development tax breaks for business would help Boeing, who very much has been in the crosshairs. It would help Amazon. Lots of big name companies would win out of this, as well as, the child tax credit. It's much smaller, about a tenth of what it was during the COVID era when everybody was getting checks in the mail. But this would affect, sort of the working poor in the U.S., a contingency that Biden very much needs to vote for him in November.
We talked a lot about the child care cliff coming into this year with COVID enhancements, COVID funding expiring at that point. We still really don't have a sense of the impact that has had. But again, something that Democrats, something the president can run on. Remember, this goes back to Build Back Better. We were talking about the expanded. He's been working on this for 2 years at least.
Yes, absolutely. And again, this is much smaller than what he and what Democrats had envisioned. It doesn't help the middle class as much as I think they had hoped going into these negotiations, but it really does affect, sort of low-wage workers.
It's a good bumper sticker, especially when you're, I promised you an expanded child tax credit and you got it. Megan Scully, always a pleasure to see you here on Bloomberg. Of course, I'm Joe Matthew in Washington. Kaylee Lyons is making her way back from Manchester, New Hampshire. She'll be back with us tomorrow here on the fastest show in politics. Nathan Dean from Bloomberg Intelligence is on the way in next as we try to gauge the odds on whether any of these pieces of legislation might pass. The day after New Hampshire, this is Bloomberg.
Sports and money. They've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
Cornhole's one of the only sports in the world in which you can have male and female players playing at the highest level against one another.
I'm Jason Kelly, a business journalist and sports fan with a couple decades covering Wall Street.
Getting involved from a business perspective was something that was very natural and easy transition for me.
I'm Vanessa Perdomo, a former college athlete and journalist working across media.
Let's do it.
All right, you ready?
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
I got a point! From the pickleball courts of Arizona
to the kabaddi tournaments in India,
to the cornhole boards at your local tailgate. This is what's next in sports.
You're listening to Balance of Power with Joe Matthew on Bloomberg Radio.
As we carry the ball from New Hampshire back here to Washington, D.C., where there are some pretty important matters to discuss. We may have avoided a government shutdown a couple of weeks ago, but we've got another potential one coming in March, not to mention this border deal that we were talking about with Megyn Scully. This is critically important if we're going to provide the funding that the president asked for our allies in Ukraine, never mind Israel and Taiwan, all looped into this supplemental request. And it hinges on a generational deal on the border. With us now from Bloomberg Intelligence, senior Washington policy analyst Nathan Dean. It's great to see you. You're not running odds as you are on some legislation on a border deal, right?
Yeah, that's right.
But to be clear, your sense of optimism.
Yeah, so we're using that hyper-technical term, cautiously optimistic.
Okay.
With the caveat, though, that there's really nothing pushing them. Like, there's no political pressure saying, you got to get it done. I mean, obviously, the House is out this week, so the Senate has some time to negotiate. We obviously heard that there were a lot of disagreements in this Republican meeting held at the lunchtime. But, you know, we think that, you know, because you have so many different individuals, you know, Senator McConnell and his, you know, allies on the Hill, you've got some of the Democrats and so forth. Plus, you got the fact that a lot of people don't like what's going on here. You know, ultimately, we think there could be a deal. But most importantly for us is the Ukraine funding. Because from a market or an equity perspective, if President Biden gets that $43 billion or so in equity fund or in funding for Ukraine, my colleague Will Lee would put a note out essentially saying that the Raytheons, the Northrop Grummons of the world, you're looking at a 1 to 2% increase in sales over the next 2 to 3 years as a result of that. So from the equity perspective, the Ukraine funding is the most important for us.
You know, it's really interesting, the investment in our defense industrial base that would come from this legislation. It would be going, to your point, to American defense contractors working to replenish stocks in Ukraine and here at home. Do they have the supply chain or the manufacturing chain to do that? Let's say you get all the money, but how do you build it if you don't have the system to make that happen?
Obviously, there's a time lag. I mean, anytime you see type of, and this is something that we tell our clients, anytime you see funding coming from Congress going somewhere through an appropriations bill or to a departmental funding, if you will, a program, you usually need about 18 months to model out your forecasts in terms of when it actually hits the company. So in terms of a supply chain, obviously there's going to be, you know, stuff already available that they can ship out immediately. But from a modeling perspective, we always tell our clients to use that 12 months to 18 months buffer. And if you have to go through the contracting process, that could even get dragged out to 2 years.
Replenishing our own stocks, as I mentioned, is a big part of this. These contractors could be busy for years on this particular amount of money. But how about defense spending itself, budgeted defense spending? We could be going into a potential sequester in April if they don't figure out a deal on the budget. I suspect that those same clients calling you would not be too happy about that.
Absolutely. I mean, you know, if we're still operating under a continuing resolution come April 30th, there's an automatic 1% sequester, and that includes the Department of Defense. Now, the government shutdown fight in early March comes to play here because you've got two deadlines, March 1st and March 8th, State of the Union being on March 7th. Now, we don't think that there's going to be a shutdown on those dates because A, you don't want to have a shutdown during a State of the Union, and B, we do think that this sequester issue on April 30th is going to be resolved. So in the short term, I don't think you're going to see a small hiccup for these defense defense contractors.
Okay.
In the long term, we have an election. President Biden versus President Trump.
Yeah.
And, we're beginning to, work with our clients on what does the long-term prospects mean under each candidate, and defense is certainly in the play there.
Pretty remarkable stuff to consider how much we have yet to learn as we now approach February. And frankly, the next fiscal year. We haven't even figured out this fiscal year. He always brings us great analysis and lets us know what the clients are telling him when they call. Nathan Dean, great to see you. And great work, as always, from Bloomberg Intelligence. I'm Joe Matthew in Washington as we turn our focus to New York now. It's almost time for Bloomberg Business Week. Carol Master and Tim Stenovic are standing by here. Guys, we're talking about the border coming off of New Hampshire when that was, again, it wasn't just Iowa, it was New Hampshire, both much closer to Canada than Mexico, where the border and immigration were the overriding issue far and beyond the economy. It feels, Carol, like the world is turning a little bit here from what we considered conventional wisdom in an election.
Yeah, I feel like when it comes to politics, everything continuously is upended in terms of how we've conventionally thought about it in the past few years. And on that, listen, you know this better than most, right, Joe, that it looks like we are racing towards a Trump-Biden rematch, if you will. Come November, we're not there yet. A lot can happen. November is still a long ways away. But it's interesting. We had a conversation earlier this year with the folks over at Eurasia, and they highlighted the number one risk for 2024 was the U.S. versus itself.
Right.
They are worried about political division. So we're going to talk about
that interview with Cliff. I look forward to that. That was one of the scariest conversations that I heard. When you consider it, he said this, Tim, remember, once we get to Super Tuesday, if it is clear that it's Trump versus Biden, you will start seeing violence break out around the country. And that's the kind of stuff the market's not going to have a lot of time for.
Yeah, that's a really good point, Joe. I mean, do you think that Nikki Haley will drop out before Super Tuesday? What are the analysts saying today after her showing yesterday in New Hampshire?
It's a great question. There's just no apparent path. But if you're reading the terminal, her very important meeting with some major donors in New York is still set for January 30th. If she's got the cash, she could just hang in there and try to gather delegates in the hopes that Donald Trump has some legal problem that knocks him out of the race.
Anything could happen, right?
Either
We've
way.
learned that.
You said it. I know you guys will be talking about that and a lot more ahead. We look forward, as always, to the conversation with Carol and Tim live from New York. I'm Joe Matthew with Kaylee Lyons back in the mix tomorrow here on the fastest show in politics. We'll see you back here. Bloomberg Business Week starts now.
This is Bloomberg.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar.
I love looking at different things that are going on in our economy. The Fed president's kind of battled it out about what's going to happen next.
And Tim Stenovic.
Consumers are out there spending money. They have jobs. Higher for longer is what we hear from the Fed. Higher for longer is what we hear from the IMF also.
On Bloomberg Radio.
And a very good afternoon, everybody, live on Bloomberg Television and Radio. We're on YouTube. We're also on Bloomberg Originals. I'm Carol Massar along with Tim Stenovic. Let's get to the setup at this hour. And Tim, I mean, I feel like it's all about superlatives. You've got the NASDAQ 100 continuing to climb above yesterday's record close. We saw the S&P 500 too at another record level.
Yeah, let's talk individual stocks here. Alphabet and Meta hitting all-time highs. Microsoft too, as its market cap surpasses $3 trillion. And then there's Netflix soaring.
Yeah, it is. I feel like, should I say irrational exuberance? I want to be very careful.
No, I mean, based on what Joe said just now, does it all come apart if things get unsteady during the election?
Exactly, but you look at Netflix numbers, and those are fundamentals, and that's what it's trading on. And so we're going to talk a lot more about Netflix and those super strong subscriber numbers. What else came up on the analyst call we want to dig into a little bit?
Also on our radar, Spirit Aerosystems rallying after a report in the Seattle Times that the company wasn't responsible for a fuselage panel that blew off midair on that Alaska Airlines flight earlier this month. Boeing shares slightly higher. Other news on China orders and more. We're going to have the latest with Brooke Sutherland.
Don't kill me, but there's a lot of crosswinds, cross currents when it comes to Boeing. So we're going to talk about it because Boeing shares, folks, are up 2.25%. Plus, we just talked with Joe, Trump racing towards that 2024 Biden rematch after what we saw last night in New Hampshire. So what does it mean? Do the folks at Eurasia have it right that the number one risk is the U.S. itself? So we're going to dig into that. We've got
Cliff Kupchin coming back.
We do indeed.
All right, and speaking of risks, the Red Sea shipping turmoil is sending economic shockwaves far and wide. It's today's big take and one of the most read on the Bloomberg terminal.
You're going to want to stick around for that. And also, hey, everybody wanted burrito makers.
I know how to make a burrito.
So listen, if this doesn't work out, I have a job for you.
All right, what about the host of The Daily Show?
Jon Stewart need not apply.
Yeah, he's got a new job already. We're going to talk about that and more.
We got a lot going on. All right, everybody, let's get you going, though, on this Wednesday. First up, a check on your top business stories. A look at the trade. Here's Charlie Pell.
Hi, thank you very much, Carol and Tim. The Dow, the S&P, NASDAQ, all pushing higher. We are off session highs, but right now we are looking at a 22-point gain in the S&P 500 index. A record there, up now by about 0.5%. We were trading above 4,900, 48.87 right now on the S&P. We've got the Dow up 22 points, 37,928. We were trading above 38,000 on the Dow Industrials, up now by about 0.1%. NASDAQ, the composite index, up 132, higher by 0.9%. NASDAQ 100 index up 182, higher now by 1%. 10-year 4.17% with a 2-year that's yielding 4.37%. A retreat for gold down $14 the ounce. Precious metal now at $20.14 the ounce, down 0.7%. Bitcoin up 1.3%, 39,710 on Bitcoin, while West Texas Intermediate crude up 0.7%, 74.92 a barrel. Earnings front and center. Look at Netflix shares. That stock up now by 11.8%. Streaming giant reported its best quarter of growth since viewers were stuck at home in the early days of the pandemic. And yes, we're going to get you covered and up to speed on Tesla. Tesla reports after the close of trading today. Tesla shares right now ahead of earnings, up by 0.1%. Also after the bell, IBM up now by 0.2%. Recapping, stocks are higher right now with the S&P up 22, a gain there of 0.5%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thanks so much. Well, two stocks that we are watching. Charlie mentioned this as well. We're talking about Boeing and Netflix. First up, Boeing shares are indeed higher. In fact, pretty much near their best levels of the day, Tim. They're up about 2.25%.
Yeah, Boeing may be careening from crisis to crisis, but Wall Street analysts still see hope on the horizon, even as investors race away from the stock. A couple reasons for optimism. A robust book of orders that should keep cash flow steady even after a major chunk of fuselage fell off one of its planes. Plus news that Boeing was sending its 737 MAX back to China for the first time in 5 years. All the coverage about safety concerns. Boeing analysts have barely budged in their average of 12-month price targets for the stock, Carol, pushing it down just 3% to $265.25. That's according to data compiled by Bloomberg.
There's a lot going on. Let's get to more on the latest, which is the company that really is the U.S.'s biggest exporter. It's a big one. Of course, we're talking about Boeing. So Bloomberg Opinion, M&A, and industrials columnist Brooke Sutherland writing about it. She joins us on Zoom in Boston. Brooke, good to have you here. It does feel like there's cross currents when we think about the order book that Boeing has and China deliveries, and yet we still haven't quite figured out all of the safety issues. That's still an overhang. So what's the fundamental smart story that you are thinking about and writing about when it comes to Boeing?
Well, I think it depends on your perspective. To your point, certainly, the order book is very robust, but that also reflects the fact that this is a duopoly. And Airbus is sold out of narrow-body jets into the 2030s. And so if you want a plane before that, you're going to have to buy one from Boeing in that narrow-body market. And so, I think that's been the reality for a while with Boeing, even coming out of the 737 MAX crisis, is that you are never going to have a situation where airlines are going to stop buying these planes because they simply cannot do that. And so for better or worse, the MAX and Boeing more broadly is here to stay for the long haul. But I do think, what has come to light in the wake of this Alaska Airlines accident and the spotlight that it's put on Boeing's safety culture is very important and should not be lost sort of in the shuffle on the day-to-day numbers of deliveries, nor do I think it will. I think that the company is realizing how serious this is, and hopefully this is the beginning of them finally starting to take the kind of deep-rooted overhaul that probably should have been done a long time ago.
We'll talk a little bit about the origin of that, Brooke. You write about it for Bloomberg Opinion in one of your most recent pieces about when the culture at Boeing really changed from an engineering culture to one, and for lack of a better term, maybe one of more geared toward financial engineering.
Sure. There's a lot of discussion on when that moment was. Was it when Boeing bought McDonnell Douglas in the late 90s? Was it when the company decided to move its headquarters out of Seattle to Chicago? It's then since removed the headquarters again to Arlington, Virginia, which is even further away from Seattle. I don't know that it necessarily matters what the moment was, but I think the point is that this is a culture that has lost its way. And I think the company needs to properly reckon with that and figure out what the future of Boeing looks like. And I don't know that you can do that without doing sort of a top to bottom rethink on just how this company operates, what its quality control processes are, and how it, finds a way to actually manufacture and deliver airplanes. I mean, that is what this company is supposed to do, and it cannot do so on a consistent basis.
But, Brooke, it's kind of crazy that after the crashes and the loss of lives after the 737 MAX problems, that they didn't figure it out then.
You're absolutely right. I mean, I feel like this, it is notable that Boeing CEO Dave Calhoun has thus far been willing to call this a mistake. Now, he hasn't said specifically what Boeing's mistake was, but that is a big shift from the MAX crisis, where we saw Boeing pointed the finger at just about everybody but itself. So that is progress. And, he has talked about steps that he's taken to sort of build safeguards into Boeing's quality control processes and safety culture. But obviously that was not sufficient. And I think that, this accountability that Boeing has is too little too late.
You're right, Brooke, that this time feels different. And I think it seems like a big part of why it feels different is the different things that we're hearing from Boeing's biggest customers right now. Talk to us a little bit about that and what the airlines are saying and how that shifted in the past few years.
It does feel like a little bit like shaming.
Yeah.
I mean, I think deservedly so.
Right,
I mean, if you think about what the airlines have been through over the past couple of years, because it's not just, the higher profile stuff that everyone's been paying attention to in these last couple of weeks. Boeing has also had to slow deliveries because of manufacturing issues with oblong fastener holes, with incorrectly installed rear fittings. There was, the 787 Dreamliner deliveries were on pause for a very long chunk of time while it sorted out issues with that airplane. And so I think the airlines' frustration is just palpable. I mean, again, this is what Boeing is supposed to do. They're supposed to make and deliver airplanes, and they cannot do so. And I think, to see these airline customers coming out and calling so openly for change at Boeing is notable, because this is just not something that you see in any industry, really.
Brooke, is it fair to say that Boeing did it well for years so that they can get back to there? We understand efficiency and cost cutting. There's a lot of pressure if you're a publicly held company, but at the same time, Boeing's been living under that kind of world for decades. They can get back there? Is that the thinking? Is that your thinking? Is that what investors are thinking at this point?
Sure. I mean, this is certainly not a unfixable type of situation, and I think it's really about getting back to basics and figuring out how you run a factory. And I mean, we've seen this done at other places. GE is a really good example. There's been a lot of shared executives between GE and Boeing. That was a company that was in crisis not really all that long ago, and Larry Culp has come in and really put that company on a healthier path. And he's done it in part by doing a number of acquisitions, a number of divestitures to sort of salvage the balance sheet. But he's also just really focused on operating an industrial company. He's on the factory floor. He's very hands-on, and I think you need somebody like that at Boeing to reinstill a focus on quality, safety, and deliveries.
All right, going to leave it on that note. Hey, Brooke, thank you as always. Bloomberg Opinion, M&A and Industrials columnist Brooke Sutherland joining us on Zoom in Boston.
Yeah, thanks so much, Brooke. Hey, now to the other stock that's definitely on our radar. It is nearly 2% of the NASDAQ 100 and more than 10% of the New York Stock Exchange's FANG Plus index. We're talking, of course, about Netflix soaring today, up 11.8% now to its highest in more than 2 years. And that's what happens when it shows it can do what it did during COVID. And when we were all stuck at home binging on Tiger King, Queen's Gambit, Squid Games. Did you watch that one?
I did not.
Okay. It's a little squeamish, okay?
Yeah.
And more. Just a reminder, Netflix reporting its best quarter of growth since viewers were stuck at home in the early days of the pandemic.
All right, the company, you know the number, signing up 13.1 million new customers in the final 3 months of 2023, exceeding Wall Street's estimate of 8.91 million. So it was a big beat. And in fact, it beat projections in every region of the world. We've got a great guest, Tim.
Yeah, Michael Pachter is joining us. He's managing director of entertainment and analysts at Wedbush Securities. He joins us on Zoom from Long Beach, California. Michael, good to have you with us. Good to talk to you again. I mean, this is a company you've been covering for more than a decade, and your view has certainly shifted. Let's talk about where your view is right now. You've got an outperform on the stock. You've upped your 12-month price target to $615 from $525. Not quite a street high, but you're among the highest according to the analysts that are tracked by Bloomberg. Why the upgrade?
Well, I've covered it for 20 years in August, actually.
Wow.
We had a sell on it from roughly $10 to $6.90, so wrong for 10 years. And
ouch.
And then I upgraded at 180. And we put it on the best ideas list at 330. So what I'm seeing is what I criticized 10 years ago or 13 years ago on the downgrade to sell. I'm seeing them do what I said they needed to do, which is stop being fixated on adding subs at all costs and start focusing on profitable subs. They're doing everything right. They're managing their spend properly. They're shifting their budget more toward television, away from movies. You saw Scott Stuber left the other day. They are shifting their budget more toward international production, which costs about half as much as domestic. They are far more international. And what you're seeing now is that subscribers are coming in at very, very high margins. You're seeing operating profits expand materially, literally 300 basis points a year, which means they're going to make a lot more money than anybody thinks in the next several years. So they trade, a 20-something multiple. We have a 30 multiple price target. Could I be at 40 or 50 or 60? Sure. It really depends on how fast or.
Hey, Michael, we want to bring up a chart for all of our viewers, and it shows just the blowout number of subscribers added in that last quarter. It looks like it could, pull back a little bit in the next quarter in a big way. But as you were saying, it's not just the net number of subscribers, it's that the folks that they are signing up, they're making more money off of them.
Absolutely. And, if you see that 13 million number, new subscribers, 40% are signing up for the $6.99 ad-supported tier, but they're generating about $16 because the ad load is about $10.
Nice.
So, they've shown that by lowering price and adding advertising, they're attracting people that couldn't afford $15 before. The balance of those people are largely coming from password sharing crackdown.
Yeah.
And, there are people whose kids, their adult children or their parents.
Tim's brother included. We're just going to share that. We've shared that several times on air. Sorry, Tim's brother.
Yeah. And again, that has a double whammy. The people who shouldn't be using it are signing up on their own, and people who you want to pay for, my kids who are college grads, I'm paying for them. I pay for their cell phone. I'll pay for their Netflix subscription. So that expands average revenue per member and it expands new members. You're seeing it all just dovetail nicely. And now they're doing something clever. They're adding gaming. They finally have figured out how to do it. And that makes the service stickier. You're less likely to quit if you've been on the Netflix service in the last month. Stuff like Grand Theft Auto Trilogy gets people coming back.
Hey, Michael, you're also a gaming analyst, we should note, so you covered this stuff really closely. What is Netflix doing that the other companies are not doing, that, the Disneys aren't doing, the Paramounts aren't doing, the Peacocks aren't doing? Like, why is Netflix executing so much better?
First mover advantage is the biggest thing. They've kind of created the fund that would buy licensed property, would license things like Suits, from the other networks. The other guys were trying to go all proprietary all the time. So CBS content stayed on Paramount and NBC content stayed on Peacock. ABC stayed on Disney Plus, and they didn't have the critical mass to actually support giving away all that content without collecting subscription revenues. Netflix has 260 million subscribers. They can pay up. They did this for WWE. It's a perfect example of something they took away from USA Network, and now they're going global with it. Their idea is we're taking something that has an audience of fewer than 1 million people a week, and we're going to expand that to 5 million people. And when they do that, they leverage their subscriber base. They can afford to pay more. The network, or in this case, WWE, says, of course I'm taking more money. So the other guys are being dumb. Peacock, okay, $110 million for one game so we can all see Taylor Swift one game. Dumb. Really dumb. I know they got 3 million subscribers. All those people are going to quit in another 2 weeks.
Hey, no dissing on Taylor Swift here. Hey, having said that, Michael, that's fair. We all do. Hey, listen, we've got just about a minute left here. So you obviously are upbeat. You like the WWE deal that they just did, and they kind of front ran earnings yesterday in a big way. Having said that, what would make you turn bearish again on Netflix? And again, just got about 30, 40 seconds.
Valuation. I mean, if the stock gets to much more than it's worth, of course, I would downgrade. I am very comfortable at 615. I probably could be comfortable at a higher number if I see greater earnings growth than we have forecast. But if the stock ran to 2,000 or 5,000, of course, I would downgrade.
All right, Michael Pachter. Hey, you know what? It's okay that you pay for your kids' Netflix, okay? I'm just throwing it out there. Like, that's fine. You're not the only one who does that.
Your kids are older and you're paying for everything.
I'm just wondering if the other streaming services are going to wise up soon to, crack down on password sharing the way Netflix has. I get the sense they are, but it's going to create a lot of changes in households.
Well, talking with our Gita Ranganathan yesterday, I mean, this whole idea that Netflix has figured out how to pivot, right? From when they used to be, the little red boxes and that you put them in the box?
The DVDs you're talking about? The little red boxes?
VHSs?
They didn't ever do it. They didn't ever do it tapes. No, they were all DVDs.
It just feels like they did.
They did pivot a lot.
All right, you've got Netflix shares, folks, up almost 12% in this session. This is Bloomberg.
Politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, live around the world every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything.
Did art conservation help you in any way to be a better investor? And should a lot of good investors learn how to be an art conservator as well, or not?
I think in conservation and art history and liberal arts, I think differently than a lot of people that have just done finance. And also, I think I mentioned one of the things is to do conservation, you have to really do a lot of pre-work before you actually do a treatment. And so a lot of that pre-work is very similar to what I do in due diligence for investments. Lots of testing, lots of thinking about what could go wrong, lots of research. When I was an art historian, that was in the old days before the internet, but you'd sit in the stacks and you'd pull one thing in a bibliography on this and you'd sort of, like a mosaic theory, put all these things together. I feel like I do that in my due diligence.
You later got asked to be the head of USAID.
I got that job when I was 36 years old.
36 years old. You're running USAID. How many employees does it have?
We had 11,000.
And did you feel qualified to run something that big?
I did until, the work started.
DOJ or other authorities.
Could face bigger challenges next.
It was going to keep Green World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets.
24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow just turning negative. First time today. Dow Jones Industrial Average now in the red, lower by 39 points. Drop there of 0.1%. S&P 500 index, which had been trading above 4,900, now at 4876, up 12 points, well off session highs, up there by about 0.3%. NASDAQ up 86. That is a gain of 0.6%. But the big news right now, Dow just dipping into the red, down now by 36 points, drop there of 0.1%. 10-year 4.18%, with a 2-year 4.38%. Spot gold down $16 the ounce to 2012, a decline of 0.8%, while West Texas Intermediate crude is up 0.7%, 74.91 a barrel on WTI. Spirit AeroSystems Holdings shares surging after a report in the Seattle Times said the company was not responsible for a fuselage panel that blew off midair on an Alaska Airlines flight earlier this month. Spirit AeroSystems up 7.2%. Boeing shares are advancing as well today, up now by 2.2%. After the close of trading today, we will be hearing from Tesla. Tesla now lower by 0.7%. Again, recapping, S&P holding on to a 13-point gain right now, up by about 0.4%, but the Dow turning negative. Dow Industrials down now by 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Yeah, looking forward to seeing how much Tesla has sold during the quarter. All right, everybody. Once again, as you know, politics are front and center. As you know by now, former President Donald Trump put himself on the cusp of clinching the Republican presidential nomination after New Hampshire voters handled him a decisive victory in Tuesday's primary. We just talked about this with our Joe Matthew.
Yeah, President Trump, former President Trump, I should say, comfortably dispatched his only remaining challenger, former UN Ambassador Nikki Haley, a little more than a week after his romp in the Iowa caucuses forced his other main rival, Florida Governor Ron DeSantis, out of the race.
All right, so the back-to-back wins putting the former president, Donald Trump, on track to deliver a knockout blow to Haley, Nikki Haley, next month in her home state of South Carolina. And then, of course, he turns his attention to an all-but-certain rematch with President Joe Biden.
Well, a voice we wanted to get to and hear from again, the interview this hour, who was on with us at the beginning of the year to talk all about the firm's top risks, predictions for 2024, in a year that the organization labeled as one of, quote, grave concern. With us again is Eurasia Group Chairman Cliff Kupchan on Zoom from Washington, D.C. Cliff, good to have you back with us. Has your view changed at all over the last couple of weeks, given that it's increasingly looking like former President Trump will go head-to-head with President Biden?
Our view hasn't changed, but, the movies, we're watching the movie now. He's very, very powerful. He made that clear in New Hampshire, though I do think polling data from both Iowa and from New Hampshire shows, he's got a pretty low ceiling. He's going to have trouble getting independents, and he needs them to get over the top. But I think people are going to start to realize, if they haven't already, when Haley drops out, I think she'd run a great campaign. I would be surprised if she makes it to the South Carolina primary on 24 February, where she's going to get really beaten if she does, beaten badly. So he's got the nomination, and I think what we wrote about is starting to happen.
Hey, Cliff, we were struck when we talked to you earlier this year at the kickoff to 2024 that the number one risk in the report that you guys put out was the United States versus itself. And here's what you guys all wrote. The U.S. presidential election will worsen the country's political dysfunction, testing American democracy to a degree the nation hasn't experienced in 150 years and undermining U.S. credibility on a global stage. Remind us how you guys came to that determination to call it the number one risk.
Because President Trump would put the erosion of U.S. democracy on jet skis. I mean, look, if he wins, I think it's more likely than not that he will do so-called Schedule F, turn civil servants into political appointees, get rid of the people he doesn't like, and then go ahead to weaponize the Department of Justice and the FBI. And that will probably hurt American democracy. I think there'll be another election. American democracy is going to continue, but it will be severely tested like it hasn't been since the Civil War. And we've really got another Civil War on our hands if Trump wins.
Another Civil War on our hands.
Yeah.
What do you mean by that?
What I mean by that is that I think we will probably see unrest, significant unrest, in the major cities on both coasts. That is the kind of, pulling at the tissue of what makes us an American democracy. The American democracy is ripping the tissue apart. Will the body survive? I hate to be sort of metaphorical about that.
Right.
Yeah, it will. But we're in for a tough ride.
Hey, Cliff, to be fair, and, there's lots of polls out there that say that most Americans aren't really happy about either choices at this point. And as we often say in the investment world, the past performance is no guarantee of future results. So we don't really know what a second term would be like for either Donald Trump or Joe Biden. But for Donald Trump, and to be fair, his policies, whether it's China immigration, are something that continue to be talked about and dealt with. We understand that there are issues, significant issues, even in the Biden administration. They have continued. So I guess, to be fair, we don't exactly know what it would mean. But I wonder if you're saying that no matter who's in the White House, it's a test for democracy.
I think this year will test democracy. And that's sort of the front-loaded part of what we were saying. That this will be a very nativistic, very visceral campaign. And yeah, to be fair, I think some of former President Trump's policies were good for markets. One could even say constructive. In my own view, I think Biden's been tougher on China in many ways than Trump was. But I think this country's so polarized right now, that if Trump's elected, you'll have Democrats really not buying that he's a legitimate president because he should have been in jail. And, B, I think he's going to bring in, the Heritage Foundation. There's a lot of think tanks out there going to staff him with, I think more loyalist far-right people than he had the first time around. So, I think there's a good chance that we're going to get more extreme policies than we got the first.
And to be fair, there's certainly many cases, and ongoing litigation with the former president that we're kind of waiting ultimately for the outcome to see what happens. So just to kind of put that out in the center.
He faces 91 felony charges in 4 separate cases. They range from conspiring to defraud the U.S. in his efforts to overturn the 2020 election loss, to falsifying business records to cover up hush money paid to an adult film actress. So they really run the gamut.
What I want to ask you is, how can we all as Americans, we are the voters ultimately, we pay taxes, we employ everybody who's down there in Washington. What's the role that you think Americans need to play in this division, or trying to fix this division?
Yeah, sure. That's a great question, and one I love answering. So look, put up with it short. When I was on vacation recently, I was in West Virginia and called, I won't say the county, but the executive committee of the Republican Party of a very conservative county. Met them with my 15-year-old son for lunch. And I think I told you guys, it was a fascinating discussion with some West Virginians who felt like they had seceded from the United States of America. A. B, I was the first person from Washington they had ever talked to. And they didn't want to secede from the United States of America. So I think there is a national conversation that we really need to have. I feel lonely when I call for that because the Democrats aren't calling for it and the Republicans aren't calling for it. But I think this kind of national town hall would be a really constructive thing to try, because Americans are good people, I think. We're just really polarized.
Hey, go ahead, Carol.
I just want to mention on AP News Alert, United Auto Workers Union endorsing President Joe Biden for re-election as the Democrat works to win over the rank and file. So we know he has been, many would say, a friend to organized labor. We've seen him out there certainly supporting them.
Well, Cliff, speaking of business, I mean, that's what you do at Eurasia Group. You advise businesses about how to handle the political climate, the geopolitical climate of the U.S. and of the world. One, what are you hearing from CEOs right now about a potential Trump second term? And 2, how are you advising them to navigate it?
Well, what we're hearing is a lot of interest in, what a Trump 2.0 would do on tariffs and on protecting certain sectors generally. Is there a, trade to be made on a 10% universal tariff, that kind of issue, or on revoking PMTR, preferred trade status from China? Firstly. Secondly, there is a lot of concern in C-suites and corporate boardrooms about the issue of instability on whether America's status as the ultimate safe haven for capital in the world, and capital's a coward, only goes where it's comfortable, is that going to continue to be the United States if Trump gets elected? I think there's a lot less. There's an assumption that Biden 2.0 would be like Biden 1.0. So I get a lot less questions about Biden being reelected than I do about Trump. A lot of interest in Trump, though.
Is there, just in 30 seconds, does it seem to be that executives are supporting Trump to a different degree than they were the first time around? Just 30 seconds left.
I think that a lot of previous Trump voters are kind of scratching their heads and saying, look, I prefer what this guy would do on markets. I prefer deregulation. I like that. But am I going to have to put up with a degree of instability and lack of confidence in the country that is going to hurt my bottom line if you look triple net? So I think there's more doubt, I would say, even among formerly pro-Trump Republicans.
All right, we're going to leave it on that note. So glad we got some time with you. Cliff, thank you so much. Happy New Year again. Cliff Kupchan, chairman at Eurasia Group on Zoom from Washington, D.C. Just to rehash a headline that just crossed, the United Auto Workers endorsing President Biden at its annual legislative conference in Washington, signaling union support in automaking swing states. The president right now making some comments at that event.
Hey, let's go to Washington, D.C. now for a check of the latest world and national news. We got Nancy Lyons in the Bloomberg 99.1 newsroom in D.C. Hey, Nance.
Thanks, Tim. President Biden, as you've been mentioning, is picking up a new endorsement. He's received the support of the United Auto Workers. The president of that union, Sean Fain, says the union is backing Trump because is backing Biden because they called former President Trump a, quote, scab. Houthi rebels continue to target ships in the Red Sea, and the U.S. is continuing to fight back. National Security Council spokesman John Kirby says the Houthis fired at least 3 anti-ship missiles earlier today.
One missile missed by something like 200 kilometers. The other 2 were shot down by a U.S. Navy destroyer.
Kirby says the U.S. will continue to protect shipping as long as the Houthis conduct the attacks. There's no deal yet, but members of a bipartisan group in the Senate are sounding optimistic that legislation on border security and immigration reform will be coming together soon. The White House is expressing optimism, but there may be some sticking points on how much it could ultimately cost. Connecticut Senator Richard Blumenthal.
There is a compromise solution here, and I think we're close to it.
Blumenthal's colleague on the other side of the aisle, Lindsey Graham, says there's no such thing as a perfect deal, but he says they're close to finding something they can do to address the border. Well, guess who's coming back with a blend of news and late-night laughs?
This is The Daily Show with Jon Stewart.
Jon Stewart is returning to The Daily Show after a 9-year absence to lead the satirical news program through the 2024 U.S. presidential election cycle. Starting February 12th, Stewart will host the Comedy Central program every Monday night with a rotating lineup of performers anchoring the rest of the week. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
Regional sports networks. There's a lot of, it's a business that seems to be collapsing. Leagues have sort of toyed around with, should we do something ourselves? Some teams are doing like local TV and streaming. How do you see that shaking out?
So I don't think I'm right on this, but my instincts keep telling me this is what's going to happen. Because if you remember the WWE, they launched their own network that had their own content and had their own pay-per-views. And it was kind of a smart, bold, ahead of its time move. And then they pivoted at the perfect time and they sold their content to, what was it?
Peacock. Yeah.
And that was really smart too, because they were able to leverage that number as high as possible. So they always zagged where the money was and when the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that themselves.
What do you consider to be the biggest challenge?
Infrastructure that supports trade is the biggest challenge. Our senior brother, President Adesina of the AFDB, estimates the annual deficit, infrastructure deficit in Africa to be over $100 billion. But that over $100 billion is actually also an opportunity for investment. So it is a massive, a significant challenge that we are confronting. And my fear is that we may succeed in establishing a very effective legal construct and a very effective legal foundation for trade liberalization and investment liberalization in Africa. But all of that will come to naught if the infrastructure deficit is not addressed, because you will need the goods to move somehow, and you will need to have good trade corridor connectivity, ports, trade corridors that connect countries that are landlocked to the ports.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow Jones Industrial Average now trading lower. S&P, NASDAQ, they are back in the green right now. We've got the S&P up 15, holding on to an advance of 0.3%. The Dow, though, negative on the day. Dow Industrials down 14 right now, drop there of less than 0.1%. Virtually flat on the day. The NASDAQ 100 index up 133, up by 0.8%. The Russell 2000 index of small cap stocks lower now by 0.6%. 10-year yield 4.17%, with a 2-year that's yielding 4.37%. Gold down $17 the ounce at $2,012. That is a drop there of just about 0.9%. Crude oil up 1.1%, 75.18 a barrel. Brent, the global benchmark, trading above $80 a barrel today. Barrel of Brent 80.12, up 0.7%. Bitcoin up 1.3%, 39,713. Netflix surging after earnings. The streaming giant reported its best quarter of growth since viewers were stuck at home in the early days of the pandemic. Netflix shares today, they are advancing. We do have Netflix climbing today by just about 11%, 11.9%. Tesla reports after the close of trading today, Tesla virtually flat on the day. Also today, DuPont reported earnings down 11.2% right now. IBM, by the way, also reports after the close of trading. IBM now up by about 0.1%. So again, recapping, we're looking at red on the screen for the Dow Jones Industrial Average, down now by less than 0.1%. Little changed on the day. S&P higher now by 0.3%, up by 16 points. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening and watching Bloomberg Business Week on this Wednesday. Charlie mentioned Tesla, and this is certainly something we're going to be focused on in a big way after the close when they report their earnings. But what we're concerned about is this slowdown that we've seen in EV adoption just across the industry. But Tesla obviously getting hurt as well because it's a major player.
Yeah, think about just over the last few weeks what we've heard about GM and Ford scaling back their EV expansion plans, the Hertz news that they're selling off a chunk of their EV fleet, including a lot of Teslas, and reinvesting in gas cars. At the same time, over that period, Tesla has lowered prices further, eroding its once hefty profit margin. So it's being hit not just on the top line in terms of concerns about demand, but also on the bottom line because it keeps lowering prices to try to sell more vehicles.
Right?
Yeah.
And what's interesting, I love this story by our Esha Day and Dana Hall, and they just say, as both the worst performing and most expensive stock among the Magnificent Seven tech mega caps, and this is the pressure that Tesla faces. I mean, it had a great year, a very bullish year yesterday. The stock ran up, I think, more than 100% or so. But what's interesting is the valuation is certainly, pricing in, if you will, really high expectations that they can continue this growth. And that is not necessarily going to be the case based on the bigger, broader macro story that we've seen in terms of EV adoptions.
Hey, now to a story that probably should be on your radar. We are, of course, getting Tesla
that one
results.
Shouldn't be on your radar?
It should, but we're getting Tesla results after the bell. What is one of the big risks to 2024, of course, the fallout from a war in the Middle East that looks like it's going to drag on indefinitely. All that brings us to the Red Sea, where attacks by Houthi militants have triggered the biggest redirection of shipping in decades.
Yeah, this is a big story. We've continued to talk about this being one of the risks of 2024. Just the latest for you all. Today, U.S. Central Command forces conducted strikes against 2 Houthi anti-ship missiles in the southern Red Sea after determining they were an imminent threat to merchant vessels and U.S. Navy ships. We know that this has been going on and off, if you will, for the last 2 weeks. This story, though, is today's Bloomberg Big Take. It's one of the most read stories on the Bloomberg. And it's all about the economic shockwaves brought on by the turmoil in the Red Sea. So let's get to it with Enda Curran.
He's global economy reporter for Bloomberg News and joins us on Zoom from our Washington, D.C. bureau. Enda, good to have you with us this afternoon. Give us some numbers here and just contextualize for us just how disruptive the attacks in the Red Sea have been when it comes to global trade and when it comes to the global economy.
So it's the biggest supply chain shock we've had since the pandemic. Remember what happened during that crunch? There weren't enough ships, containers. You couldn't get the stuff to our supermarket shelves. Broadly speaking, people thought that problem had gone away in 23. Goods were flowing, freight costs come back down. Well, guess what? We've had this big shock in the Red Sea. All of these ships are having to divert away from that part of the world, so they can't use the Suez Canal. They're going down around the southern coast of Africa to get that merchandise goods to Europe. It's mostly Europe on the front line, but it does affect America as well. As you said at the start there, it's the biggest diversion of international trade in decades. Concern is, what will it mean for inflation? And then, by extension, what does it mean for the supply chain story again? Our factories are going to have to once again start thinking about nearshoring, friendshoring, onshoring, and all of that. So it's not on the scale of the pandemic shock, but it's a shock just the same.
Well, and as you say, the Bloomberg intelligence team estimates the rerouting adds about 40% in voyage distance. So that's going to cost money in fuel, in time. People are waiting for ships. They're waiting for containers. It just kind of disrupts again. Having said that, your story says, though, there's no sign the higher costs are boosting inflation yet. How is that? Is everybody who's shipping things around, and companies in particular, are they just eating the costs right now?
So it takes time, right? And as you mentioned, this will mean more expensive staffing costs on the ships, more expensive fuel costs, and more expensive freight costs because these containers and ships are underwater for longer. So that builds up the costs for your manufacturer and your retailer. Now, right now we're at a stage where people are waiting and seeing. Some of these costs can be absorbed, but on the macro side, the issue is the longer it carries on, then the more you'll hear companies complain, and then the more they will say we have to pass along these costs to our consumer. Again, just stressing, we're not talking the magnitude of what happened during the pandemic just yet, but you couldn't say it's not a complication for the inflation story either, and this is meant to be the year of disinflation.
Is there a way to understand the types of goods that are shipped through that region, where they're from, where they're going to, what they consist of? So when we do see eventually, if we do see those price increases on those things, we know why? Or is this the type of thing where it could hit everything?
It could. So we're talking here about merchandise goods, right, from East Asia. All the stuff that goes into our shopping baskets is made in that part of the world. It goes into big containers and it gets sent around. For the European market, it goes through the Suez. The US market across the Pacific, but I'll come back to the US in a moment. So those goods are at risk. And then from South Asia, you're talking about all the textiles and apparel, all the clothing. That is at risk. You hear some of the producers in Bangladesh, for example, already complaining about rising costs. And then as you move across to Africa, you're talking about the resources and agricultural food produce trade. That's getting caught up in the mix. So that's also being impacted. Some retailers in Europe already, like in the UK, for example, well-known brands like Tesco and Next, they're complaining that costs may have to go up. So the cost of shipping the stuff that go into a typical shopping basket will go up. Now, US is being buffeted somewhat at the moment just because most of the merchandise goods going to the US comes across the Pacific. But of course, if the cost of freight goes up, cost of shipping goes up, cost of oil goes up, that will impact every route, no matter where you are. So Europe gets the first round, US gets the second round effect.
You say the U.S. being buffeted, Russia also being buffeted. I thought that was kind of interesting in your story. I get it, but just explain that one.
Well, so there is a view out there that this particular, the conflict on the Red Sea is broadly targeting, if you want to call it Western ships or UK, US ships, and that Russia and China are going to be able to navigate this because of the geopolitical alliances that are underway at the moment. I mean, that's one take on it, but people will tell you that ultimately, if we get to a point where this is carrying on, and freight costs are going up and scarcity or capacity becomes more scarce, then everyone's going to get an impact somewhere along the line.
And we got 30 seconds left. Just give us an idea of what analysts are saying, what executives are saying right now about how long they're thinking that this thing could last.
Yeah, no panic right now, but they're thinking 6 months ahead. If there's no de-escalation, so one clothing manufacturer I spoke to who gets stuff from Dongguan in China, he's saying, not worried now, but when I want to book my ship for April to get the clothing to Europe and the US for the fall season, that's when he's worried about how the rising costs will impact him.
So obviously the longer this goes on, the more of an impact it will be. Enda, thank you so much. Really appreciate it. Enda Curran, global economy reporter at Bloomberg News, joining us on Zoom from our Washington, D.C. bureau. You can read Enda's story and more from Bloomberg's Big Take. It's on the Bloomberg terminal. It's also at bloomberg.com/Big Take.
It's incredible what we're seeing right now in terms of the idea of nearshoring and friendshoring, just continuing since the pandemic.
Yeah, and I think
for
it's
multiple
things
reasons.
like we look for in the earnings reports, especially where it pertains to certain companies. You're listening and watching Bloomberg Business Week. It's Wednesday. It's Carol Massar. It's Tim Stanovic. This is Bloomberg.
The annual prize money pool in LPGA tournaments has grown 50% since 2019. In 2023, it topped $100 million. But the prize fund still lags far behind what men compete for on the PGA Tour. The inequality hits hardest at the lower end of the money list.
Clearly,
Clearly, we want the top players to continue to make a great living playing. These are the very best in the world. But we also then dig in and say, okay, what's the 50th best player in the world making, and what did she make last year? I've asked Kathy to run numbers many times to say, okay, tell me where we are exactly during the middle of the season, at the end of the season.
That 100th player, our goal would be to obviously have that player make considerable amount of prize winnings, and we're going to work really hard to do that. Having said that, we do need to continue to focus on ways to provide opportunities so that 100th best player can cover those costs that it takes for them to be out here on the golf course. That's hiring a caddy, that's travel, that's strength coaches. We're helping to provide stipends for health insurance or create a tour-wide health insurance program. Ability to create more discounts for travel, for hotel and car and all those things that really cost them a lot.
To meet these objectives, LPGA leadership collaborates creatively with sponsors.
We've worked with some of our corporate partners to say, help us solve a problem. Help us create a fund that will allow our players to get to the first tee ready to reach peak performance.
Headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. DuPont shares now lower by 13.2%. DuPont says tepid demand from China is weighing on first quarter sales, sending the stock plunging. We have got the chemical maker forecasting net sales to be around $2.8 billion in the first 3 months of the year. That is below the $3.03 billion estimate of analysts surveyed by Bloomberg. Again, DuPont shares, they are declining, down now by 13.2%. Ford is recalling nearly 2 million of its popular Ford Explorer SUVs that are at risk of having their windshield trim detach while they are in motion. Ford shares right now down 2.7%. That recall, by the way, covers certain 1.9 million Ford Explorer models from the 2011 to 2019 model years. AT&T lower after the telecommunications giant projected 2024 earnings that fell below analyst estimates. Right now, AT&T is tumbling by 2.9%. The company says it expects adjusted EPS of as much as $2.25 this year, missing Wall Street's expectations of $2.44. Texas Instruments out with a disappointing quarterly forecast, signaling a persistent slump in demand for industrial and automotive electronic components. eBay cutting about 1,000 jobs, 9% of its full-time employees. It will also reduce work for outside contractors, saying staffing and expenses have outpaced growth. eBay shares down now, eBay is advancing now by 0.2%. After the close of trading today, we will be hearing from Tesla, also reporting after the close of trading, IBM. Tesla up now by about 0.1%. Those are our top company stories, and this is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
It's Bloomberg Business Week. Carol Masser and Tim Stenivek. Let's get a check on the latest world and national news. For that, we go to Nancy Lyons in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. President Biden is picking up a sought-after endorsement today from the United Auto Workers.
UAW family, today I'm proud to stand up here with your International Executive Board and announce that the UAW is endorsing Joe Biden for President of the United States.
UAW President Shawn Fain says Biden has earned the endorsement. Fain called former President Trump a scab who only represents billionaires. Negotiators between Israel and Hamas have come up with a detailed proposal they've presented to both sides for a permanent ceasefire. This is according to two people with knowledge of the talks. But they say many obstacles remain. Israeli government official Ilana Stein does not sound supportive of any ceasefire.
Israel will not give up on the destruction of Hamas, the return of all the hostages, and there will be no security threat from Gaza towards Israel.
Stein says Hamas cannot be trusted to stick with any ceasefire. The deal being negotiated calls for the release of all remaining hostages held by Hamas in Gaza and for Israel to release a number of Palestinian prisoners and allow the flow of humanitarian aid into Gaza. Russia is accusing Ukraine of shooting down a military transport plane that it says was carrying 65 Ukrainian prisoners for an exchange. There were no survivors. Russian Defense Committee Chairman Andrei Kartapolov made the charge while addressing a session of the Russian State Duma. Kartapolov did not offer any evidence, but he says the plane was shot down by U.S. or German-made anti-aircraft missiles. It was 40 years ago today the world of personal computing changed. The Apple Mac computer was introduced to viewers during Super Bowl 18 in this dystopian ad.
On January 24th, Apple Computer will introduce Macintosh.
The $2,500 that bought a Mac in 1984 will buy a MacBook Pro M3 with a lot more memory. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Nancy Lyons. Now back to you, Carol and Tim.
All right, Nance, thank you so much. Carol Master along with Tim Stanovic here, live at Bloomberg headquarters in New York City, our radio studio. We're on TV. Welcome, everybody, again. I know this was our first week on TV. And for all of you looking for a job, it's burrito season.
Did you know there were seasons that included burrito season?
I had no idea. March to May. That's
okay.
the peak.
There's spring.
It's burrito season.
There's summer, there's fall, there's winter, and there's burrito season.
I had no idea. And apparently Chipotle is looking to hire about 19,000 workers around burrito season.
Yeah, they were planning to add 15,000 across its North American locations.
Apparently we're going to be eating a lot more burritos.
They've got 110,000 employees at its 34,000 at restaurants, mainly in the U.S. They got 40 in Canada and 26 in Europe.
Speaking of jobs, we're all kind of job related right now. You know who doesn't need a job anymore?
Yeah, I do.
I mean, what? Who?
Jon Stewart.
Yeah.
Yeah,
Coming
did you
back.
see this earlier today?
Kind of love this.
Okay, so he's returning to The Daily Show after a 9-year absence. He's going to lead the satirical news program through the 2024 U.S. presidential election
Not
cycle.
every day.
Not every day. Starting next month, February 12th, he's going to host the Comedy Central program every Monday night, and then there's going to be a rotating lineup of performers anchoring for the rest of the week.
He's also executive producer.
That's big.
Yeah, big deal.
A lot has
It makes
changed,
sense
though,
with
when
the
it comes to
political
media
season. Makes
over the
sense
last 9 years since he's been gone.
Absolutely.
I mean,
well, all
the shift from linear to streaming.
Right. And a shift kind of in all those late night shows. But I think with the presidential season, you expect it.
And it's not like he's been off. He had the Apple show for a few years.
You know what the net is?
What's the net?
I'm hungry for a burrito.
I thought you were going to say Jon Stewart's not going to be working at Chipotle.
I'm guessing not. All right, everybody, lots more to come in the next hour. We've got not Netflix earnings. We had that already. But Tesla earnings after the close. We're going to talk about the Everything Token, and we've got to talk about Goldman and Lazard. They've got ex-spies that they are working with. That's all coming up.
Big gains for big tech. Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Bostick.
And I'm Alex Steele. We are counting you down to the close of markets. Melt up, but we're fading a little bit. I gotta say, a little bit of a melt up and then a little bit of a fade. Sure, we're at records for the S&P. Yes, we're at records for the FANG Plus Index. And I say that because it's all a big tech. Whether you're looking at NVIDIA or Tesla, Microsoft, Google, they're all in this. But for the S&P, we're fading a touch. One of the reasons why comes from the bond market. You're looking at yields really pushing higher. We had a 5-year auction that was kind of meh. Demand wasn't that great. There was some concession into the bond auction, so you're seeing yields move by 4 basis points higher. Also, we've moved really far, really fast. Even the bull like Ed Yardeni is now a little bit worried about just how far we've come.
Yeah, we need to talk about that a little bit later here. We've already blown past all of the estimates for the year. But let's talk about some of the individual stocks here, because if there's any doubt here about market leadership, well, you got a big reminder of that today here. Let's take a look at NVIDIA. It was last year's best performing stock, at least among large cap names. And as of today, now it has reasserted itself as the best performing stock here in 2024. Now, the big spark that we see on the day is largely because of that earnings report we got out of ASML over in Europe, an earnings report that seemed to suggest not only a trough in the chip cycle right now, but actually maybe potentially some good times ahead. NVIDIA shares up more than 44% over the course 4% today over the course of a 5-day, 12% run. That has gifted investors now a more than 26% return here just to start the year here. That's more than double the gains that you're going to see from Meta, triple the gains from Microsoft, and almost 4 times the gains that you got right now on Alphabet. Now, while NVIDIA shines, Tesla is actually the only member of the Magnificent Seven that's down on a year-to-date basis. While the stock is getting the modest bid today, we are expected to get those earning results out of the company a little bit later tonight. We're not quite in panic territory when we talk about that 15% drop to start the year here, particularly when you consider that the stock doubled last year here. But of course, a lot of concerns right now, not just about how many cars Tesla can sell this year, but more importantly, at what price. There's going to be a lot to talk about with the micro, but we do need to start the show off with the macro here, Alex. There's going to be a couple of big economic data points coming down the pipe over the next couple of days. That first look at fourth quarter GDP, and of course, a fresh look here at that monthly PCE inflation data.
Yes, growth and inflation, the two core topics, right? So here's my question. Do we see good growth in the fourth quarter? So expectations are for 2%. So this bottom line shows quarter-on-quarter annualized GDP, right? We're right at 4.9%. That was the last read for the third quarter. We're supposed to go down to 2. Okay, but the top part is a month-on-month read of composite PMI. You got manufacturing, you got services. We got that today at the highest level we've seen since 2022, and it's actually re-accelerating. We're now at 52.3, both in expansion territory for manufacturing and services. Plus, everyone felt better. The service and manufacturing industry saw their order books increase. They are a little bit more positive when it comes to the next, say, 6 to 12 months. Can we really see growth decline if those kind of indicators are picking up? I realize one's sentiment, and I realize one's month on month, and this is actual data, but nonetheless, Romaine, it raises some questions about just how negative growth will actually be tomorrow.
Absolutely here. And we're talking about the potential for a slowdown. We know we're going to get that. The question is, I guess, to what extreme, and more importantly, can investors live with it? Ed Hal-Husseini joining us right now, senior currency and rates analyst at Columbia Threadneedle, helping us kick off to the close here on this Wednesday afternoon. And Ed, let's start right there here. We're going to get a nice look here, at least how the economy was performing at the end of last year. And while most people expect that annual growth rate came down significantly here, it's still, at least by U.S. standards, still relatively healthy.
Yeah, things look pretty good. You know, it's a little bit of a step down from Q3 into Q4. Q3 was really extraordinary, close to 5% growth. Stepping down to 2.5%, I think makes a lot of sense. But look at the broader picture. Growth last year was truly solid, particularly when we look at the consumer side of the economy.
What's being priced into this market right now? Because when you look at the price action in fixed income as well as in equities here, it seems on the surface that you have a market that does anticipate maybe a slightly stronger economy. Do you find that?
I think that's right. If you look at risk premia, whether it's in equity markets or credit markets, where credit spreads are significantly compressed at close to historic tights, we're looking at a really good outlook from the perspective of risk. At the same time, when you look at rates markets, there's a little bit of weakness in the price. There's clearly an accelerated easing cycle that's being priced in. So there's going to have to be some reconciliation of the two, I think, in the coming quarters.
Does 4.2% on a 10-year yield, does that tell me economic times are going to be good going forward?
I think what it's telling you, particularly if you look at the inflation-adjusted rate, close to 2% across the curve, it's telling you that monetary policy is relatively tight given what's happened to inflation. And I think the key feature of what's happened in the last year is inflation has come down really aggressively. And what it's telling me, anyway, is that monetary policy is a little bit on the tight side. It's likely to normalize in the course of the next couple of quarters.
So normalizing, not cutting for recession, which I feel like is a really big difference when we're looking at how we understand the curve and where you want to place bets.
I think that's exactly right. It's sort of a two-step dance for the Fed. The first step is responding to the fact that inflation's come down. Yep. And inflation's come down a lot faster than they anticipated. We're close to 2%, depending on how you measure it. The second step will be potentially responding to weakness in the labor market, responding to some uncontrolled or unanticipated tightening in financial conditions. That's well into the future. That's hard to anticipate. The first step, let's just respond to the fact that inflation's come down to 2% over the last 18 months.
What are the chances, though, that the economy actually does better than we think? Like, I realize like a PMI versus GDP isn't like the perfect comparison, But the economy has continued to surprise, and a lot of data is showing that maybe it could be better than we think.
I think, especially when we look at the economy through the lens growth, those odds are really good. Consensus expectations are weak. They're around 1% for the year, slightly above 1% if you look at the Fed's Q4 over Q4 metric. These are really low numbers. These are below potential growth for the U.S. Odds are we'll likely surprise them to the upside, particularly in the first half of the year. Yeah. When you zoom out a little bit, look at the labor market. The labor market's been weakening pretty much in a linear fashion on the margin. At some point, that starts to show up in the unemployment rate, and I think that's when things get interesting.
Ed, I want to get your thoughts here. Just over the last couple of hours here, we had to interview David Weston, sat down with former Treasury Secretary Robert Rubin. He raised a lot of concerns about the current U.S. deficit, the servicing costs related to that, and making some correlations, I guess, between some of the policies that have come out of Washington, the moves that we've seen in rates, and ultimately what ends up feeding into the market here. Do you actually see any material risk coming out of the big budget? What do we call it here? Just lack of interest in dealing with the budget in Washington?
Pretty much, yeah, that seems fair.
So let me kind of make two broad points. One, if you look at the last 30 years, the debt has grown significantly. We've transitioned into a place where we're running much larger deficits, and yet in aggregate, the real rate that we're paying on those deficits is lower. That's largely reflecting the fact that investors are willing to finance the government. There's a lack of safe haven assets out there. And the U.S. government has tremendous credibility in terms of being able to lower those deficits going forward. And I think the key question, and I think this is the issue that the Secretary brings up, is that credibility degrading? If markets sniff out that the government is becoming less credible in its ability to maintain deficits or to consolidate those deficits in the future, rates will rise. And we saw a preview of that in the UK briefly a year and a half ago. Yeah. Is it likely to happen in the US? I don't think so, but these are exceptionally difficult things to forecast, I think.
All right, and I'm sure you'll be on top of it. One of the best in the business here, Ed Al-Husseini, Senior Currency and Rates Analyst at Columbia Threadneedle, helping us kick off to the close here on this Wednesday afternoon with the eye to earnings coming after the bell. Tesla will have a breakdown of what to expect out of those results. Ross Gerber going to be joining us, co-founder and president over at Gerber Kawasaki.
Plus, shares of Boeing just whipsawed on the day. We're going to break down the flood of headlines moving the stock. It's today's stock of the hour.
And ghosting is not just for romantic partners anymore. We're going to learn why investors are apparently trying to ghost some of their finances. See what I did there? A great piece here on the Bloomberg terminal. We're going to have a full breakdown here of what's going on in that sector when we come back after the break. This is The Close on Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader. Yes. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg. Top experts. Great questions. In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Going ghost on investors. So I guess ghost is a verb now for that. All right, startups typically depend on serial infusions of funding from backers to get through their early years. And a so-called down round that's raising money at a lower implied valuation than before is a big black eye. So lately, companies have gotten very creative to try and avoid being considered less valuable. Joining us now is Hema Parmar, who wrote the story for Business Week, as well as Ken Smythe, managing partner over at Next Round Capital, who's quoted in the piece and remains giving me a thumbs up because I said both names correctly, which was not a given 5 seconds ago. All right, Hema, when you wrote this piece, what did you find out? Because managing this is really important for startups.
Precisely. And in this market where everything has gotten a lot more challenging, people are very concerned about valuations. And companies are concerned about a potential down round or being viewed as less valuable in a tricky market. It can impact their future fundraising, it can impact IPOs. And so some of the things that we're seeing they're doing to avoid potentially being viewed as worth less, ghosting investors, not sharing information with them, impacting the secondary market, blocking secondary transactions, all these kinds of methods to sort of keep their viewpoint and their perspective of investors higher.
Ken, that can't be cool.
No, it's not.
Right, so then where's the visibility?
So CEOs are really just hoping that, this all goes away one day and that they can cling on as much as they can to 2021 valuations, which as we call is the high watermark. We're unfortunately a lot lower than that. And so the difference that we're seeing is that 2021 high watermark and people fighting to sort of find balance of what true valuations are. But the challenge, as Hema said, is how do you know the true financial performance of these businesses if they're not giving it to you and they're only giving selective disclosure? So this is how Sarbanes-Oxley got started in the public markets. Some investors got certain information, others investors didn't. In the private market, it happens every day, right? So you have a wide disparity of valuations and prices of where these companies are trading. And if the CEO and the board doesn't like it, they don't allow it.
Okay, so there's an issue of the opaqueness of what's going on, not only in terms of the performance, but also the story points out that there are workarounds to sell off shares in a way that wouldn't be made public, or at least not be made privy for the folks who would have a stake or at least have some interest in knowing that that was done.
Correct.
How do you do that?
And so you basically, it's a workaround, right? It's called the gray market, right? And this is where you try to keep these transactions away from company management, the board, and you as an LP will say to another LP, hey, I'll create a new LLC structure. You can own the LLC structure and buy it. And, it's just our deal, right?
How much of this, though, is being spurred from internally by those companies, and how much of it is from the outside pressure by investors and LPs? I mean, there are a lot of folks who have raised a lot of questions in this recent cycle about the returns that were promised and the returns that they have not yet gotten.
That's right. So we're in an environment right now where this business, venture capital, was $27 billion of invested capital in 2012. Currently, as of last year, we're at $345 billion. So massive growth. The number of unicorns went from 9 in 2012 to 345 today. So you can understand this is now what used to be 10, 12 years ago, really kind of a small little cottage industry, has now grown into a massive amount of companies that are now having to abide by standards that were set many, many years ago, right? And so basically the growth of the market hasn't kept pace. And so LPs are upset, right? They want what they call DPI, which is basically a return of their cash. They were told 8, 9, 10 years ago, by 2024, like, when the Jetsons were flying around, when the Jetsons are going to be flying around, you're going to have your money back with a 2 to 3x return. Well, many of those Fund 1 and Fund 2 still haven't given $1 back. And so with an IPO market that's been slow, M&A market that's been very tepid, you only have one option, is you can sell in the secondary market, or you continue to wait till venture capital markets tell you what they're worth.
Emma, if the Fed cuts rates, does this all go away?
I mean, it's going to take time because companies are dealing with cash flow issues. They're dealing with debt they have to pay off. It's going to be a little while, and some of them still haven't been marked down by investors nearly as much as they may need to be. So there is this lag between public markets and private markets, and you see that in sometimes 18 months delay. So things will probably get better as rates come down,
but it's going to take some time, I think.
And in addition to that, only have about 30 seconds left. Does a healthier IPO market, does that absolve some of this?
It does and it doesn't. It actually, this is where CEOs are really trying to guide the valuation, because as you start talking to bankers, they start paying attention to where actual transactions are happening, right? So the least or the lesser data they have pointing to a lower valuation, they can turn around and tell their bankers, hey, we've got stock that's trading at a premium or close to our valuation. That's where our IPO should go out. But the public markets are always going to determine what these companies are worth. So they're going to have their day in the sun at some point. It just doesn't happen in the private markets.
All right, well said, Ken. Going to have to leave it there. Really fascinating story here. Ken Smythe, Next Round Capital Partners founder, and our very own Hema Parmer, who has what is quite frankly the story of the day for me. You can check it out in Bloomberg Business Week, and of course right there on your Bloomberg terminal. Coming up here on the program, a check on supply chains, a check on transportation as we await for earnings over the next few days and weeks from CSX, Knight Swift, and several other companies. A discussion here about what to expect on the close. This is Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much, much more than a bookkeeper.
One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We are like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
It's an amazing time to be in this role. It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. A new episode every month, only on Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg.
All right, let's get a view from the sell side with our top calls, the big movers on the back of analyst recommendations. And we start off with AMD and the potential of AI. New Street Research lifting its recommendation to buy from neutral and setting a $215 price target. The analyst there, Pierre Ferragu, expecting spending on AI chips to actually boom to about $400 billion by 2027. And in his view, he says any company out there that would be best positioned to take advantage of that, it's going to be AMD. Those shares up 5%. 177, that's a record high on the stock. Next up here, let's take a look at Biogen, getting a downgrade today over at UBS to neutral. A lot of concern here about that company's Alzheimer's drug and some of the slow uptake that we're seeing right now in terms of demand. The analysts not actually seeing any real catalyst out there that would change that trajectory. That's why you got the downgrade there. That's why you see the stock lower by about 1% on the day. And finally, let's take a look at Uber, losing its buy rating over at Gordon Haskett. The Gordon Haskett going down to neutral today here. The analyst says that Uber deserves a premium relative to its competitors here, but says that right now, anything that could potentially move the stock higher has already been priced in. Those shares down about 1% on the day, 63.57, and those are some of our top calls. All right, let's turn now to what is going to be a big earnings story of the day. Transport companies, CSX and Knight Swift, are scheduled to release results after the bell tonight. Let's get a preview on the health of those companies and really the broader transportation and supply chain sector. John Chappell, research analyst over at Evercore ISI, joining us right now. He has outperform rating on CSX. So let's start there here with the rail freight company here. What are your general expectations here? This is a company that for a while seemed like it was kind of on a path to a resurgence.
Yeah, thanks, Romain. So for CSX, I'm not expecting anything too robust. I mean, just an inline result here, I think will be good enough. I think the most important thing we're looking for is 2024 volume expectations, and I think there'll be a pretty broad range there, something somewhat opaque, like better than GDP or better than industrial production. But probably the biggest takeaway we'll see from CSX is how they talk about productivity and incremental margins as it relates then to that volume growth. You know, CSX is typically the first railroad to report almost every quarter. But given a funky calendar this quarter, Canadian National reported last night, had a very robust and potentially even ambitious volume outlook for 2024, but very muted margin and EPS growth in relation to that volume growth. So I think that the U.S. rails, CSX tonight, Union Pacific tomorrow, Norfolk Southern Friday morning, will have better things to say about incremental margins and then growing earnings with a better volume expectation.
How much does that tie, though, into economic conditions? Because there are a lot of people, they look at consumer spending, they look at manufacturing activity, and they try to sort of extrapolate sort of the flow of goods around the country and how that either helps or maybe potentially hurts CSX and its peers.
Yeah, exactly. And I think what's really interesting about the rails for 2024 is this is the one segment of transportation that was a net loser during the goods boom post the lockdowns in the early stages of the pandemic. They didn't have the service reliability to move the cargo when it was more timely than it was a margin store to the retailer. So they lost a lot of share. Right. And now when their service is better, they put a lot of costs into the system. This is why we're talking about incremental margins for 24, because it was decremental margins in 23 in the back half of 22. So they have a lot of share to gain, even in a stable ice cube. The ice cube may be melting a little bit, but as rails take a lot more share off the highway, there's a lot of growth potential for their intermodal segment, really for the overall volume story in rails, while the others, trucking companies, maybe a good segment tonight, stagnate a little bit.
Stable ice cube. I don't know if I've ever heard that before, John. But to that point, does that also mean that if there is a downturn, CSX will be very, very hard pressed to lay off people and trim their workforce? Like there's no fat to then trim?
Yeah, that's exactly right, Alex. I mean, for what's happened in the last 20 years is the rails have been able to flex variable costs very quickly in downturns in freight. And given the regulatory landscape, some of the service issues they had the last 2 years, the unions have become quite more emboldened. They just don't have those levers to pull. So that was a big, issue for the rails in 23.
Right.
Volumes were weak in 23, and they weren't able to take incremental costs out. In fact, they had to add them. That's the opportunity for 24, 25. Now, if we go into a hard landing and recessionary backdrop, then certainly I think it's going to be difficult for any rail to improve their margins.
So what's in the stock? We're like a stone's throw away from a 52-week high. The stock's had a really nice run. I know you said that sort of in line will be good enough, but what's going to be kind of the next catalyst to get even more juice going?
Well, there's going to be two things. I mean, tonight, again, it's going to have to be a focus on margin improvement. Can they get incremental margins in a decent volume environment? But over the coming weeks, it's going to be a story about volume growth again. Are you going to get that market share back? Are you going to grow better than GDP? Are you going to win the share that you lost over that 2-year period? And it kind of filters into a domino effect. If rails get the volume, they should be able to get the incremental margins and greater EPS growth. Typically, also when rails get volume, they get multiple expansion. CSX is one of the few companies in all of transports who are trading at more of a kind of a trough multiple than they are a peak multiple. Everyone's trying to buy the last cut. Where's the next positive rate of change? Huge multiples on trucking companies, on even the Canadian rails. But the U.S., especially the Eastern rails, are trading at muted multiples. And I think they'll get some of that expansion as the volume comes back as well.
All right. Thanks. And so, John, it gets to this idea, too, when we talk about sort of the feed-through here to economic conditions and, more importantly, how investors view this. Is there really a case to be made for, I guess, the value that we used to sort of find out of a lot of these companies? The idea that they were kind of seen as value plays. Some of them, at least in the old days, used to actually pay pretty healthy dividends, though I know that ship might have actually sailed. But is there a sort of a case to be made for that actually coming back?
I mean, it depends on the stock. I mean, we're pretty cautious on most of our coverage universe. We like CSX, we like Norfolk Southern, we like Union Pacific, effectively the U.S. rails. But we're neutral to, even more cautious on most of our other coverage. We didn't talk really about night much as the biggest indicator, the bellwether for the trucking industry. But this is an industry now that's in the 23rd month of what we'd consider a freight recession. So this restocking thesis that a lot of people are kind of anticipating or had been anticipating for 12 months, that retailers are going to start buying aggressively again and restocking their inventories, it hasn't played out. And we're far more cautious on the outlook for that occurring at least in the next 6 months and potentially even the next 12.
All right, John, thanks a lot. Really appreciate it. John Chappell over at Evercore ISI. That reminds me kind of what DuPont was saying. And I realize DuPont's more levered to China, but the idea that the businesses that they serve are destocking. They're not refilling their stocking, and that's causing problems for them. It's very
and
similar.
how many people have we spoken to right here on this program that have talked about what he just talked about in the retail space here? People getting that inventory under control. And I guess if you're a company that ships inventory, that's not exactly what you want to hear.
No, not at all. All right, staying with the companies, Tesla. It's the day. The growth in the spotlight, margins in the spotlight, profitability in the spotlight. We're going to get a take on what to watch as they report after the closing bell today. This is Bloomberg.
I notice in a couple of drugstores, even in my area, which is not the poorest area in Washington, D.C., it's a nice upscale sort of area. When I want to get razor blades, you have to go to the front of the place and ask somebody to unlock it. Why are you locking up razor blades and other things that I might want to buy?
Yes. So, this is a national problem. And, this isn't, random theft. This is organized crime. And, state legislation has put guidelines on, how much the theft that you can steal before you're convicted. So it's a $1,000 limit. But we have been partnering with other retailers and sharing our camera feed. I know some of our partners here from Walmart are here, but we are all part of an organization that's coming together that says if you've, we can put our camera feed together and tell that that person has been in our store and their store, and the numbers are higher than 1,000. So we've been able to impact these theft rings most recently.
What are the things that are unlocking key the most? What are people trying to steal the most, other than razor blades?
I will tell you, it started at razor blades because that's such a high ticket item, but it's a lot of cosmetics. But really what happens is that they take advantage of what I would call the elbow move, and they just come in and swipe a counter. And so it's just a matter of categories now.
Top names in climate finance are on Bloomberg.
I can't tell whether you're optimistic or pessimistic about climate finance.
A lot of great stuff is happening, but is it enough? No, it's not enough.
I'm biased. I'm a huge investor in both fission and fusion, and hoping that it comes in time.
Transition is not going to be an event. It's a process.
But at the end of the day, it's the right thing for the planet, it's the right thing for the industry, and there is business opportunity.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Your fixed income fix. Watch Bloomberg Real Yield at its new time Friday at 12 p.m. Eastern right here on Bloomberg. Context changes everything.
View of the New York City streets, 3:30 p.m. here in New York. This is the countdown to the close. I'm Romaine Bostick.
And I'm Alex Steele. All right, Tesla, we're like, half an hour away? 40 minutes away from Tesla? That's going to be big. Investors very much waiting for this after the bell. Profit margins, it's going to be delivery, it's going to be all that stuff.
Yeah, I always don't know what to make of these results because obviously we know a lot about their production and deliveries because they put out the monthly updates. And then, of course, course, Elon is always out there chatting it up here. I guess the big question really is here is what's the growth story going to be? It's obviously not going to be the Cybertruck. I'm talking about for the company as a whole. I know there's going to be a refresh potentially of some of their models this year. So is this going to be a story where they can sell more units, or is this going to be much more of a story about pricing and, more importantly, some of those discounts that were all the talk over the last few months?
And this always brings back like the whole, is Tesla a car company or is it a tech company, because it's the worst performer in the Mag 7.
Oh.
So does that wind up sort of dragging on growth this year?
I went through its 10K. I'm pretty certain it's a car company. They make cars.
Right. I agree with you.
Okay.
But really?
And just cars.
But they're valued like a tech company.
I know.
Like they're Mag 7, so you have to wonder, like, if they disappoint or it's not great, do they wind up dragging down the whole tech sector? Does that disrupt the market, or is Tesla just going to be its own kind of story?
Yeah, well, I think for the sake of the rest of the market, maybe some people hope so.
Maybe. All right, well, Ross Gerber is co-founder, president, and CEO of Gerber Kawasaki. He probably doesn't hope so. He owns about 388,000 shares of Tesla. If we get a dip after earnings, Ross, are you buying it?
Not at these prices, but if we really get a nice dip in the stock over the next couple months, we might. But, you know, when you look at their earnings expectation and their price earnings ratio, you know, it's a stretch to see how this stock gets, you know, much higher, but it could actually go much lower, and that could be an opportunity for investors. So we're going to see how it goes. But, you know, when you got NVIDIA trading at, let's say, 30 times forward earnings and Tesla trading at 60 times forward earnings, it's kind of hard to compare.
So in early 2022, you had margins, profit margins like 30%, and we're like half of that now. Ross, how much do you care about that number?
I care tremendously about that number because, you know, with all economics, if you have unit sales and lower margins, you know, essentially you're offsetting your growth with lower and lower profit margins, so you actually earn no more money. And that's what Tesla's seem to have gotten themselves into this pickle. Now, the irony of it is it's because they don't advertise. So here's a company that spends zero on advertising, where some companies spend 5 to as high as 20% of their or higher of their revenue on advertising. And so Tesla's got $26 billion in cash, just earning interest, and they've got waning interest in the vehicles while they increase supply, but they're doing nothing to increase demand, and that's putting pressure on margins.
I am curious as to what they can do. I mean, obviously advertising could be a component of that, but as I'm sure you know, Ross, there's been a lot of discussion about whether we've kind of already gotten past, I guess, that first peak in the EV boom, the idea that all the early adopters basically have their cars, and now you're trying to sort of woo a lot of people who are still on the fence about EVs overall, not necessarily Tesla specifically, but just about EVs overall, charging, range anxiety, all that stuff that goes into it.
Yeah, I mean, this is exactly the point. So like 90% of people still don't really understand all the value propositions of owning an EV. And then recently during the storms, you know, in the really freezing weather, it was somehow national news that it was hard to fill up your EV. Like it was any easier to fill up a gas car? I don't think so, because freezing -22 doesn't work in gas stations either. But, you know, the news covers Tesla, and then Tesla does nothing to offset this. And so any story is true, essentially, because they don't even comment when the media, you know, contacts them about these stories. So they'll tweet, but unfortunately, Elon doesn't understand that most people, 99% of people, don't actually look at X or Twitter, and so tweeting does nothing to help Tesla.
Yeah, that's a whole nother conversation, Ross. I am curious, though, about sort of what you've envisioned, or maybe, let me rephrase that. What do you want the next growth story to be for this company? Because, I mean, they've sort of reached critical mass. I mean, they control 55% of this market, at least here in the U.S., and I know that's come down a little bit given the new entrants here, but they are the dominant player here, and of course, their charging network, at least right now, is second to none here. So what can they do, I guess, going forward, longer term, in terms of introduction of new vehicles, or maybe even a pivot in some way that would really sort of be a catalyst for a huge revaluation of this stock?
You know, truthfully, they have the product roadmap already. That is what I want them to do. The business plan that we bought into is Cybertruck and semi-trucks is really the next big stage for Tesla. So they've released and launched the Cybertruck, and it's a polarizing vehicle for sure, but, you know, it has the potential to sell at least 100 to 200,000 or more a year.
You think so, really?
And for sure.
Yeah.
I mean, you know, they sell millions of pickup trucks a year in the United States, but the price point is so high that a typical truck buyer won't buy a Cybertruck until it's priced much lower. And that, I think, is a huge opportunity because most people in construction and using trucks actually drive a ton. And like the construction workers who work at my house, for example, spend upwards of 15% of their income just on gasoline. So imagine, you know, if you're in construction, the value of having an electric vehicle, but they are not buying $80,000 trucks. So Tesla needs to address the truck market. It's a huge opportunity, and these are great, you know, buyers, and they want electric vehicles. So we'd love to see the Semi and Cyber ramp, and you know, that's just the beginning. They have lots of other great stuff too, like getting full self-driving to actually work.
But why would they choose a Cybertruck? And I know the Cybertruck may be sort of a precursor to something maybe that's a little bit more practical for folks, but when you have an F-150 Lightning, for example, you have the Rivian pickup, you have a lot of other pickups that, at least in terms of the traditional styling that they offer relative to the Cybertruck, I think would have a little bit more appeal for those folks who are actually going to use a pickup truck for what its intended purpose was. Yeah.
Right, but the Cybertruck also attracts people that would not otherwise buy a truck, like myself.
Okay.
So, you know, like I would never drive a pickup truck just for the sake of it, but I would drive
You're
a
missing out,
Cybertruck.
Ross. Come on. Pickup trucks are cool depending on
I
the
do
where you
like
park
one of
pickup
those
trucks, actually.
on the Upper West Side?
I do. I live in Manhattan, so I guess it's unpractical.
There's reasons to have a pickup truck for sure, but you know, I'm actually really into fast cars, you know, like really fast cars. So I drive a Plaid, fastest car on earth.
What's that?
The Model S Plaid, you know, so I drive the fastest car on earth, and I burn these Bugattis and Maseratis and everything else that try to race me every day. It's fun. Well, not every day, but
definitely not.
So
in
that
New York
was
City.
Ross I saw on the street when I saw the Model S racing one of the Bugattis.
Ross, my question is like longer term, like we all know the EVs are going to take it, right? But in the meantime, it does feel like hybrid might actually be a good solution, and that a lot of the car makers missed a big trick with that, and that leaves a big window for like Toyota. What do you think about the hybrid in the middle?
So I think you know, I don't want to say bad things about hybrid because they're still energy efficient vehicles and serve a great purpose in the marketplace in getting people to transition to electric vehicles. But most importantly, it's better for the environment. But the idea of a hybrid vehicle is really stupid. You know, when you really just drive an all-electric vehicle that works perfectly fine, why would you need a hybrid? And the main reason hybrids have been successful is because of pricing. And, you know, you can buy a hybrid for a very reasonable price and save money on gas. And I think it's a great alternative if you're driving a gas car. So I think hybrids have a place in the marketplace that isn't going to go away. But when you drive an all-electric vehicle, the performance of an all-electric vehicle over a hybrid is like day and night. And then the efficiency of a Tesla, for example, where there's, you know, you were arguing that it's a car company, and I would say, you know, the reason why you're wrong about that is because when you drive a Tesla and you use the software, it compares to no other vehicle. It's an iPhone that drives. It's an iPhone. So I would argue Tesla's a battery maker before I would argue it's a car maker.
Okay.
You know, so they make lots of batteries that can be used for lots of things. But now I look at their charging business and I'm like, this is a gold mine. This is a huge opportunity. Huge, massive. So, you know, Tesla has a lot of potential growth in the future. And if Elon focuses and really tries to create demand, they'll be great.
All right, Ross, I love you. We love always your insights. One day we have to have like a Lincoln Douglas style debate here about whether it's a car company or a tech company here, because I've got some opinions. Ross, always great.
I'll take you to the company and you'll see when you walk in the door, it's all tech people working on software.
All right, it's a date. Ross.
And then robots.
All right, I've got to leave it there, Ross. Great to catch up with you. Ross Gerber, co-founder, president, and CEO of Gerber Kawasaki. Stick with us. A lot more coming up here on Bloomberg.
Did art conservation help you in any way to be a better investor? And should a lot of good investors learn how to be an art conservator as well, or not?
I think in conservation and art history and liberal arts, I think differently than a lot of people that have just done finance. And also, I think I mentioned one of the things is to do conservation, you have to really do a lot of pre-work before you actually do a treatment. And so a lot of that pre-work is very similar to what I do in due diligence for investments. Lots of testing, lots of thinking about what could go wrong, lots of research. When I was an art historian, that was in the old days before the internet, but you'd sit in the stacks and you'd pull one thing in a bibliography on this and you'd sort of like a mosaic theory, put all these things together. I feel like I do that in my due diligence.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, live around the world every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything.
We fly safe planes. We don't put airplanes in the air that we don't have 100% confidence in. I'm here today in the spirit of transparency to, number one, recognize the seriousness of what you just asked. Number two, to share everything I can with our Capitol Hill interests and answer all their questions because they have a lot of them.
Dave Calhoun there, the CEO of Boeing. This after a meeting with lawmakers down in Washington, D.C. Shares of Boeing actually higher on the day, up about 1.6% here. A lot of concern right now about how the plane maker is addressing some of those safety and regulatory issues surrounding its MAX 9 fleet. We're taking a closer look at the stock right now. It is our stock of the hour. Abigail Doolittle standing by here to walk us through this here. I was actually taking a look to see. I see they've kind of clawed back a lot of the losses that the stock had coming out of that when we first learned about that Alaska Airlines incident. Not quite there yet here, but investors seem to think that this is something that they can manage and something that's not going to have a long-term material impact on the company.
Well, in some ways, today's meeting in Congress or in Capitol Hill really speaks to the idea that this is a crisis of confidence. So they're clearly addressing that piece of it. There's the mechanical side of it. As a consumer, an airline consumer, the idea that you're hearing the CEO of a major airline manufacturer saying, we fly safe planes, that's just something that you take for granted. But after the two tragedies in 2018, 2019, the rudder issue last year, the door plug blowing out, last Saturday a wheel fell off. I mean, they really have a situation. It's pretty clear that there's some mechanical issues with them putting together their planes. There was a Seattle Times article out today saying that it wasn't Spirit Aerosystems' fault in terms of the door plug blowing out. It was an issue with Boeing putting it in properly. Yeah. So they have to address this. Now, from the investor standpoint, the crisis of confidence, he does seem to be doing a decent job. Dave Calhoun came in as CEO in 2020 to take over after those tragedies in 2018 and 2019. Now, though, given the fact that there are so many smaller issues, but ones that really are a little bit scary to anybody who's going to go onto one of those planes, you have to wonder, could there be changes made there? So he's fighting for himself as well. Yeah. The numbers, they've gone down from 2018 to now by about 25% for sales. They haven't been profitable in a number of years. They will be reporting next week. I think that there's going to be clearly a ton of inquiry into the 737 MAX. What are they going to do? I think that the one thing, if they're able to be turned profitable before expected at some point, that could clearly be a big thing. But the stock's still down 50% from that 2019 peak. Yeah. So they've got their work cut out for them.
All right, Abigail, thanks a lot. Really appreciate Bloomberg's Abigail Doolittle. Interesting remain that today of all days, Boeing 737 MAX has been delivered to China for the first time since 2019.
Yeah, I thought that was interesting.
Timing, just
overlap. But the timing, yeah, the thing is interesting too. And I almost kind of forgot that Calhoun was actually brought in after the Lion Air and the other major crash here. And it raises a lot of question as to whether that was the right decision. I mean, we know he was a capable executive, but this is a company that is dealing with a lot of other issues. As she said, this is more about the confidence rather than just operations itself.
Yep, culture problem. Like a culture makes a difference. It's hard to transform that. All right, well, coming up next, our next guest says that we are in a sweet spot for markets. Dare I say Goldilocks? Ashish Shah of Goldman Sachs is seeing some opportunity next. We are about 15 minutes away from the close. This is Bloomberg.
You later got asked to be the head of USAID.
I got that job when I was 36 years old.
36 years old. You're running USAID. How many employees does it have?
We had 11,000.
And did you feel qualified to run something that big?
I did until, the work started.
Sports and money. They've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
Cornhole's one of the only sports in the world in which you can have male and female players playing at the highest level against one another.
I'm Jason Kelly, a business journalist and sports fan with a couple decades covering Wall Street.
Getting involved from a business perspective was something that was very natural and easy transition for me.
I'm Vanessa Perdomo, a former college athlete and journalist working across media.
Let's do it.
All right, you ready?
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
I got a point! From the pickleball courts of Arizona
to the kabaddi tournaments in India,
to the cornhole boards at your local tailgate. This is what's next in sports.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg.
This is the countdown to the close. Romaine Bostick alongside Alex Steele. And Alex, I know you hate this rally, But guess what? 5 straight days now. S&P up again, only up 0.1%. But you know how this works. It was a record high yesterday. So 0.1% means a record high today.
A record high today. The tech melt up. And I just wanted to point out like what's happening with tech. Because if you look at the ADR of ASML, a record high over in Europe after killer earnings and really continuing that here as well. Microsoft at one point hit a $3 trillion valuation, 52-week high. Google, same thing at a record high. On the downside, and I pointed this out, Romaine, earlier, and this feels important as the underlying economy is DuPont. It's a chemical maker. Their outlook for demand was not great. I appreciate that might be just a China story, but the chemical guys are not coming out with strong numbers. Just look at, say, 3M, short cycle industrial, look at BASF over in Europe. Chemical sector weak, and what does that mean?
Yeah, absolutely. And it raises a lot of questions, too, about all that breadth that we were talking about yesterday, Alex, if everyone's just gravitating back to big tech. Ashish Shah joining us right now, CIO for Public Investing at Goldman Sachs Asset Management. As we count you down to the closing bell, just about 9 minutes away. And you saw kind of what Alex was alluding to here. I mean, there's certainly an area of this market that people are gravitating back to. And I don't know if that becomes a concern because the whole idea late last year was that we were finally starting to see to broaden out in what people were buying, what people were willing to buy. And now it just seems like people are retrenching back to, I guess, what is tried and true, and that's big tech.
Well, let's go back to why they're going back there. I mean, you consider the fact that the last 2 years, companies have really pulled back on their tech spending. You know, we've seen 3% tech spending growth. This is the year where CIOs at companies are confident enough to be investing in tech. And so you're getting a fundamental tailwind that is driving this valuation. We all know how high the margins are for this business. And I'm not even going to get into AI, which kind of opens up the value that a CIO can offer inside their company. So I think there are real strong underpinnings. Can it get ahead of itself? Of course it can, but I think it's a good long-term play here to invest in these companies.
I certainly understand the optimism, particularly longer term, and particularly when you factor in things like AI here. I'm wondering, is there an economic fundamental story there as well? Because if there is, wouldn't that also push up the Russell 2000 instead of, like it is for the last 2 days, down in the red?
So I think one of the biggest surprises that we saw in the markets last year is when we got this Fed pivot, people weren't prepared for it, right? And so they had been hiding in kind of certain parts of the markets. Why you saw this breadth in the market expand, right, as you got the pivot of, wait, maybe we don't go into recession next year. And I think part of the reason why you have seen good performance, not fantastic, but good performance within small caps is just the sheer cheapness relative to these large caps. So as you make your money in the large cap part of the market, it gives you the opportunity to then diversify your holdings, down in small caps. And I think it's simply a matter of time.
Which then leads to the Fed cuts and kind of why they're doing it, because that's going to kind of lead to what's the setup for small caps. We spoke to Ed Al-Husseini, Senior Currency and Rates Analyst at Columbia Threadneedle at the top of the hour. Here's what he had to say about rate cuts.
It's sort of a two-step dance for the Fed. The first step is responding to the fact that inflation's come down. The second step will be potentially responding to weakness in the labor market, responding to some uncontrolled or unanticipated tightening in financial conditions.
So a normalization versus then everything sucks and we got to cut. So from that perspective, like, what's the play for small caps?
Well, look, I think the simple thing that you need to consider here, and as someone that maybe isn't the best dancer, that you have to think about the fact that the inverted yield curve has kept people on the sidelines, right? So when that happens, you're going to open up the opportunity set for small caps, but it really comes down to the timing, and you're not going to time it perfectly, right? Anyone that went through October and November of last year waiting for the perfect time to go in, most of those people missed it. And so I think being a little bit ahead, really looking at the valuation and making sure you're picking the companies that are going to benefit.
How is that not a value trap, though?
Well, you don't have to go after pure value. You can go after quality that represents good value relative to the large caps, right?
What does that mean, though? Like, what does that mean, quality, in that context?
So in my mind, quality is you're generating free cash flow, you're anchored towards customers that actually have long-term growth, right? So you're tilted with a new tech stack as opposed to having to run a melting ice cube business. Like, these are all great opportunities. the biggest thing that I always keep in mind is like, okay, what is going to work over the next 3 to 5 years? And if you work backwards from that and say, okay, it can be cheap, it can be rich, but you want to make sure that whatever you're buying aligns to that long-term trend.
What don't you like? What would be considered risky right now?
Look, I think that companies that are generating negative free cash flow here and have more debt are really challenged, right? You are going to see rates come lower, but that isn't going to help a company that either doesn't have the capital to invest, doesn't have the timeline, right, or is going to face the issue of competition where they don't have pricing power. And pricing power is something that, as inflation is coming down, we're getting to learn who has pricing power within this market. In some cases, it's companies that have real product differentiation. In others, it's ones that have great relationships with their customers, really have kind of alignment to how those customers are doing well.
I want to just make a quick pivot here. We actually had an interview a little bit earlier with Robert Rubin, the former U.S. Treasury Secretary. I want you to listen to what he had to say about U.S. deficits and the markets.
I think that the risks are even greater today because our debt-GDP ratio is CBO estimates at about 100% right now. It's the highest in the history of the country, except for 1946 and 47, when we were coming back out of World War II. I think the risks are enormous, and some of them are materializing already, like higher interest rates and effect on inflation, in part, not in full. And others haven't materialized yet, but I think they're out there, and sooner or later will materialize if we don't correct our fiscal trajectory.
A smart man and a smart take there, but a smart take that I felt like I heard a decade ago and maybe 2 decades ago, maybe 3 decades ago. When does this start to matter for the markets?
Look, it matters when growth and deflation come back, right? Because if you have a modest level of inflation, you can sustain kind of debt growth, but when growth slows down, right, when your demographics go negative and your population starts shrinking, you can't support that debt anymore. And so it's the same thing when you're an individual. If you borrow to buy a house that goes up in value, having a lot of debt isn't about a big problem. If you borrow to consume, that means the future is going to be less good than today. And I think that that's the thing we have to make sure of. Look, what I know of is that the U.S. has some of the best assets out there. And most innovative companies, and frankly, that's what we're excited about.
All right, Ashish, going to have to leave it there. Great to catch up with you. Ashish Shah, CIO for public investing over at Goldman Sachs Asset Management. Stick with us. We're about to take you to the bell and beyond.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Alex Steele. We're counting you down to the closing bell. Here to help take us beyond the bell. It's a global simulcast with 5 of your most favorite people. That includes Scarlet Fu. That includes Carol Masser. And it even includes Tim Stenovec.
5 of your most favorite?
Yeah.
Maybe that these should just be your favorite people.
All right. Well, a hearty welcome to all of our audiences across all of our Bloomberg platforms, television, radio, originals, our partnership with YouTube. The S&P up fractionally, but it's the 5th straight day of gains. And if this holds, it's a record high.
Yeah, unbelievable. I feel like the superlatives that we kicked off with a couple of hours ago, it's just, you see stocks, what was it? Alphabet, we saw Meta Platforms, all at all-time highs, just taking out some of these significant levels.
Did that make you feel good or you get worried?
I get a little worried.
You bring up a good question, Romaine. I think there are certain people who are starting to get worried. We were just talking about Ed Yardeni, who came out with a note that said that he's concerned the S&P 500 may be starting a tech-led melt-up, similar to what happened in the second half of the 90s. I think people would push back on that, saying, okay, well, these are different types of companies now. But he did use the term irrational exuberance.
Well, no irrational exuberance when it comes to Tesla, which, of course, will be reporting earnings soon. It's the Magnificent Seven stock that hasn't done much of anything in 2024 so far.
Yeah, I mean, I think my thing, though, when it comes to sort of have we gone over our skis, the average price forecast for the S&P, we're like really close to that. It's like just over 4,900. So what happens, Romaine, if we hit that, Romaine, and all of a sudden, what? All the strategists come in and like redo their forecasts already in just the first few weeks in Jan?
Yeah, absolutely. But I mean, look, right now, it'll be interesting to see as we get more of these earnings reports, we get more of this commentary, whether that ends up front running some of the economic data. And we do have a lot of earnings on tap after the bell. That includes Tesla, Lam Research, IBM, ServiceNow, and CSX, just to name a few. Let's walk through the numbers before those earnings hit, with the Dow Jones Industrial Average that had spent a good portion of the day in the green, flipping into the red, down 0.3% here on the day, lower by about 99 points. The S&P 500 higher by 4 points. That may not be much, but that is, yes, indeed, a fresh record high. I should point out RSI is now firmly in overbought territory on the S&P, as it is on the NASDAQ as well. The NASDAQ closing higher by about 0.4% here on the day, and the Russell 2000 sitting this one out lower on the day by 0.7%.
All right, as we await a batch of earnings, guys, S&P 500, you had 141 names to the upside, 357, though, losing ground amid all this irrational exuberance, or whatever you want to call it, Scarlett. 5 unchanged.
All right, let's take a look at how the sectors are performing. Let's bring up the IMAP, which shows the different sectors in the form of a pie, and it's a pretty mixed bag here. One thing to note is that you are seeing some strength in energy stocks as oil prices, WTI climbs above $75 a barrel. And Alex had noted earlier the weakness in chemical companies. Material stocks are certainly weaker at the moment. And we do have some earnings now, Alex.
Yep, CSX. I love me some trains. Fourth quarter revenue coming in at $3.68 billion. That's a little higher than estimates. Earnings coming in at 45 cents a share, a little higher than estimates. The operating income a little light than estimates, but so far so good, sort of relatively solid, Carol. The real issue is going to be about higher wages and benefits and those profit margins.
Right, exactly. And they've been certainly watching their costs in a big way. I'm looking at a stock that's little change on the year. We look at something like trains, right, in terms of moving stuff around. We were talking a little bit earlier about the problems in the Red Sea and the logistical problems. So, you keep a watch on one of these names, but it's unchanged in the after hours. So it looks like investors, Scarlett, trying to make some sense of it.
Trying to make some sense of it, and of course, looking ahead to the other results. What would you say the overall picture is from the companies that have reported, Romain?
Well, it's been positive. I mean, the expectations were lower than I guess what expected, but so far, at least on an aggregate basis, I mean, they've continued to beat all of those, not only on the earnings, but also even on the revenue side as well.
Yeah, I mean, I think we're still early days, though. I mean, we still have a lot of companies to hear from. We have to hear from Tesla today. Netflix, of course, was huge blowout. We got Apple next Thursday. So, yeah, we're getting through it, but there's still a few companies to hear from.
The other thing I would say, the stocks was an outperformer. ASML coming in, and they had orders tripling. This is, a company that produces equipment to make some of the most sophisticated chips.
Is not great.
Not great, and it certainly raises a lot of concerns about other companies in a similar industry. And it goes back to that idea about industrial customers showing some weakness. That's something we heard from Texas Instruments. Carol, as much as ASML came out with good numbers and TSMC certainly revived optimism for the semiconductor industry, Texas Instruments was a bit of a cold water reality check.
Yeah. Yeah, no, it's interesting, right? Yeah, exactly. It's a reminder. But we have to remember, right, all of these chip companies are the same. And I think about something that's actually equipment, which is kind of the early end of that semi-cycle, if you will. And so, I don't know. We'll ultimately see, right, when we get through all of these earnings. And we have Tesla.
It has just crossed.
Yeah, so let's get right to it here with Tesla. The numbers coming in, EPS, the bottom line number coming in at $2.27 a share. I have to look up the comparison there, but on an adjusted basis, here's your comparison. 71 cents a share on an adjusted EPS basis. That's a bit of a miss by about 2 cents. The street was looking for 73 cents a share. Here's your revenue number, $25.17 billion. That's also a slight miss. The street on average was looking for $25.87 billion in revenue. The free cash flow number, that looks like a beat, coming in at about $2.1 billion. The street was looking for about $1.5 billion. And here's your gross margin number, a number that Ross Gerber said he was paying close attention to, a miss, 17.6% on fourth quarter gross margin. The street was looking, guys, for 18.1%.
Okay, well, let's talk about some of these reasons why profitability, operating income decreased year over year to $2.1 billion in the fourth quarter. Reduced vehicle average sales price due to pricing and mix, increase in operating expenses partly driven by AI and other R&D projects, lower full self-driving revenue recognition year over year, the cost of the Cybertruck production ramp, lower cost per vehicle, growth in vehicle deliveries, and gross profit growth in energy generation and storage. So there's a host of reasons why profit got hit.
Yeah, and 2020, this is a kicker. 2024 vehicle volume growth may be notably lower than 2023, notably lower. I mean that can't be good. You're seeing the stock kind of roll over now in after hours.
We also, of course, want to just mention Cybertruck because Elon Musk likes to talk about it so much. Not a whole lot of details, at least in this early release, but Cybertruck production and deliveries will be ramping up throughout the year. And of course, there aren't. We know that they are not being able to deliver on as many Cybertrucks as they wanted, and this has been a long, long delayed vehicle as well. But it's something that Elon Musk has talked up big time.
Hey, listen, and they're also talking about liquidity. We have sufficient liquidity to fund our product roadmap, long-term capacity, expansion plans, and other expenses. Furthermore, we will manage the business such that we maintain a strong balance sheet during the uncertain period. So kind of addressing some of maybe those concerns about cash on hand.
Okay. I mean, can you read in between the lines and tell me what that means in like real speak here? Because I'm not seeing that in the numbers at all. I'm also curious as to what the actual growth story is. Is it a ramp up of Cybertruck, basically what is right now $100,000 plus vehicle that we know a lot of people just can't necessarily afford? Or is it a ramp up of some of the lower price models that maybe not have the same profit margins, but maybe provides a bit more scale?
All right. Hey, we still got to take a look at Tesla. We're looking at Lam Research coming out right now. Shares bouncing around
You
in the
didn't answer my
hours,
question, Tim.
down 0.3%.
He ignored you.
Yeah,
I was told to do Lam Research.
Okay.
Adjusted earnings per share for the second quarter beat the average analyst estimates. Adjusted earnings per share coming in at $7.52 versus estimates of $7.14. Revenue coming in at $3.76 billion. Estimates were for $3.7 billion. Adjusted gross margin coming in above estimates as well, and adjusted operating margin coming in just above estimates.
Listen, the issue with Tesla is, and I'm looking at our live blog too, and they're pointing out what the company says about currently being between these two major growth waves. If you believe that ultimately, whether it's the expansion of the Model 3Y platform, and then that is going to provide momentum going forward, if you feel like that this company is going to provide more growth going, down the road as the world says it's still committed to electric vehicles. Talk to our Keith Naughton. He says EV universe, it's still growing. It's just growing at a slower pace, and adoption is slower. So if you continue to believe the Tesla growth story, then you buy some of this. If you are more skeptical and concerned, certainly the pullback that we've seen as of late, then you get a little bit nervous about maybe what we're hearing.
Yeah, but do you buy it at PE at 66 times? I mean, that's really the question, I think, too. And you're looking at the stock off by over 5%. I do want to go back, though, to that headline from Tesla. Volume growth may be notably lower this year than 2023. And we know that they still have some production issues. Getting batteries is going to be hard, and all of that kind of factoring in here, Romain.
Well, I mean, I want to go back to Carol's question that she posed here, because this gets to the idea here of competition. I was looking at the market share numbers. I mean, they've gone from 60+%, well, really 100% market share at one point, but in recent years, 60+% down to 55%. And I'm looking at the stocks of all these other names, of Rivian and GM and Ford, also moving.